what, 18, even 24 hours.
Looking forward to hearing from him a little bit later this morning. Also a little bit later, Lisa, front and centre for this market, the ECB, and just a little bit of pressure on Christine Lagarde.
Yeah, the issue that's interesting to me is that we're not necessarily seeing the emergency in markets. Credit conditions have actually eased quite a bit. And yet a lot of people are hoping for Christine Lagarde to come out and shock and awe, even if the market doesn't need it. As Tom was saying, 7:45 a.m. Wall Street time, we are going to get the release. And then at 8:30 a.m., we are going to be hearing from Christine Lagarde, ECB president. Also on my watch today, let's not forget, John, we've got those U.S. initial jobless claims that come out every Thursday morning, also at 8:30 Eastern. Very interesting. The amount of questions that are being raised by this unemployment data is simply surpassing the actual information that we're getting. How quickly are some of the people getting rehired? How much are these numbers understating the situation given the discrepancies that we're seeing, John? So many questions, but hopefully we'll get a glimpse into a potential recovery.
Hopefully we start to continue to see continuing claims roll over just a little bit. We'll bring that data to you at 8:30 Eastern, just ahead of that news conference with ECB President Christine Lagarde. We start this morning's program down in Washington, D.C. We head down to Washington to catch up with Kevin Cirilli, our chief Washington correspondent. Kevin, of course, General Mattis gets the headlines, but arguably the substance came from Secretary Esper, the defense secretary here in the United States, and the tension between him and the president of the United States is one key focal point this morning in Washington.
Precisely. And in fact, I spoke with a source who's very close to former Secretary yesterday, who just reminded me that there was tension between former Secretary Mattis as well as President Trump that predates even the current events. But beyond that, President Trump meeting yesterday with Secretary Esper, after Secretary Esper telling reporters that there were some disagreements in terms of how the president communicated about the use of military in U.S. communities. Now, Kelly McEnany, the White House press secretary, then coming out after that meeting, telling reporters at the White House that the president still is standing by Secretary Esper despite these disagreements. Now, also yesterday, I spoke with a Republican lawmaker in the House of Representatives who told me that the president still does enjoy widespread conservative support. However, folks have been increasingly skeptical of the president's tone on this issue. Now, Tom, you had mentioned that the president has been silent in terms of public comments over the past couple of days. That is a stark contrast from what we've seen from former President Barack Obama yesterday, who came out and called for there to be meaningful reform, but also for there to be a sense of calm and peace in the protests. All of that as the situation around the country continues, hopefully, to have these protests continue to trend toward more calm.
Kevin, how does a gentleman who worked the draft in Vietnam fire a lieutenant colonel with a Bronze Star from the Iraq War?
Look, I think that there's no question, Tom, that in terms of what you're noticing over the past 48 hours is an open disagreement in terms of the advisors around the president, both current and former, in terms of how he has discussed the military. I would go a step further, though, and note that the conversations surrounding elected officials, especially in the president's party, remains that he still has their support, whether it's Senator Ted Cruz or Senate Majority Leader Mitch McConnell. The realities of the city is still very much different than the realities of more rural and even to some extent suburban communities. However, I think it's a bit too premature to look at polls to suggest how this will play in November.
Very good. Kevin Cirilli, thank you so much, our chief Washington correspondent. John, the most extraordinary thing I saw yesterday was not the Game of Thrones look at the Lincoln Memorial, but was the typewritten memorandum from the chairman of the Joint Chiefs of Staff, and yes, he took the walk to St. John's Church with the president, with the handwritten memo down at the bottom to his officers about what his military should do. That is a document, John, that'll be in the National Archives for decades.
Tom, not the first time we've seen between a secretary of the cabinet of the president of the United States and the president himself. And I imagine maybe we'll be thinking about getting a new defense secretary in the months to come as well, Tom, because that's not what you want to see, for a government to be on two different pages very publicly.
We welcome all of you on Bloomberg Radio. Good morning in Washington and Boston, Sirius XM channel 119. Thrilled to simulcast with you. Someone emailed me yesterday and they said, is this like a one-off for the week? And I said, no, Lisa Bramowitz is having so much fun doing this that we're going to keep the simulcast going. We're thrilled you could be with us on TV and radio. And it is still about economics, finance, and investment. David Leibowitz joins us right now. He is with JP Morgan Asset Management. Good morning. Tell us simply how you have changed your asset allocation. How do you change your equity belief after up 40%?
So, I think what's most interesting from our vantage point is that we haven't really changed things too much. From the beginning, from the start of April, we were really of the view that we wanted to center portfolios in higher quality assets like technology, like healthcare, but we didn't want to completely abandon cyclicality, because if markets came back quickly, we wanted to participate. We obviously haven't been fully positioned with a cyclical tilt, so we have been underperforming a bit over the past couple of days, but some of our more value cyclical exposure to things like financials has been helping. And so I think that, when we look at where the market is today, clearly things have moved very far, very fast. There is room for markets to continue climbing higher, but I think now is probably the wrong time to materially change your asset allocation, right? Maybe a month and a half ago, this was the conversation to have, but I think that the risk reward has continued to deteriorate here, and that makes me a little bit nervous about the direction of travel for markets in the coming weeks.
David, sometimes you've just got to take a step back and look at the position we're in right now. If I told you 12 months ago that in 2020 we would have a jobs print of negative 2.76 million, and on the same day people would call it a big beat and the S&P 500 would go through 3,100, there is no way that you would believe me that is what would happen. That's what happened in the last 24 hours. David, how do you explain that to clients?
I think that it's important recognize that there's a real technical nature to everything that's going on here, and market structure is just very different today than it has been historically. And part of what we think has driven this big rebound, when we look at cash balances of non-bank investors and things like that, they still look underweight equities, but where we've really seen money come back into the market is through the more systematic strategies. And so we had this enormous spike in volatility back in the middle of March, and as volatility has trended lower over the past couple of weeks, you've seen signals triggered that bring the CTAs and the momentum traders and the risk parity funds and the vol control funds back into the market. So I think that, as quickly as we went down, it actually, with some hindsight, doesn't necessarily surprise me the speed at which things have bounced back. But I do think that this is a function of the way that markets are structured today, and that's created a pretty significant disconnect, John, to your point, between what we're seeing in the economic data and the performance of equity markets, particularly U.S. equity markets, which have really led the charge here.
All right, David, so how long can these technical factors overwhelm the fundamental factors, which are an increasing bankruptcy rate, an increasing unemployment rate, and concern that we could get some sort of W-shaped recovery or some sort of a second wave of the virus? I'm just thinking, for example, high-yield bond yields right now are within 1.5 percentage points from the all-time low at a time when the bankruptcy rate is climbing beyond what we saw in 2009. How does this make sense to you?
So, I think the market is very much focused on direction rather than level, and with things reopening, that does seem to be overwhelming the market's ability to look forward. I acknowledge everything you said. We've seen commercial mortgage-backed security delinquency rates begin to pick up. I mean, there's a lot of evidence of the stress in the economy, but the market really seems much more focused on the direction of travel of the virus itself and the ability of the economy to reopen. So, to my mind, there are really two big risks here that investors need to monitor. The first is a potential for a second wave, and I think it's an unfortunate reality given the protests over the past couple of days here in the U.S. that, to my mind, that risk has increased as social distancing seems to have been put off to the side temporarily. But the other thing that I think we need to pay attention to, and you guys were alluding to it a bit earlier, is simply the amount of stimulus that's been pumped into the economy, and more importantly, the expectation that there's more stimulus coming. You know, we have the ECB later today. The ECB historically has tended to pull out the bazooka when things aren't looking good, not when we're in the midst of a rally. And so it'll be really interesting to see what happens in just under an hour here, and whether they go through and increase the size of the emergency programs, or whether they hold off a bit. But I think that there's an inherent expectation on the part of the market that there's more stimulus coming.
David, fantastic to catch up with you, as always. David Leibovitz there of JP Morgan Asset Management. Tom, that decision around about 40 minutes away for the ECB President, Christine Lagarde. Expectations are high, and she's done very little to push back against that. Widely expected to expand QE a little bit later this morning, Tom.
There's about 4 flavors to this. Maybe it's like Howard Johnson's, John, 28 flavors. What flavor would you predict they will act on?
More QE. More QE. I think that's the most predictable stance of the ECB this morning. Much more still to come on the European Central Bank a little bit later this morning. Next up on this program, we catch up with New York's Lieutenant Governor, Kathy Hochul. We'll do that right here on Bloomberg TV and Bloomberg Radio. This is Bloomberg Surveillance.
Now let's see what else is going on around the world. Here with the latest headlines is Amy Morris. Good morning, Amy.
Good morning, Tom. New York Governor Andrew Cuomo declaring victory over the coronavirus. New York had 49 deaths, the first time in 10 weeks that daily deaths fell below 50, and the lowest daily death toll and hospitalization rate since its outbreak began.
5 regions upstate have entered phase 2. That's good news. Western New York is expected to move to phase 2 tomorrow.
New York will start to allow outdoor dining at restaurants as early as today in much of the state outside New York City. Staff will have to wear masks. Customers will have to wear face coverings too, except when they're seated. New Jersey Governor Phil Murphy also pleading with people demonstrating in response to the death of George Floyd to wear masks and keep proper social distancing amid the coronavirus pandemic. Police, meanwhile, saying that violent criminal behavior happening during the protests are being carried out by caravans of well-coordinated criminals. Former New York Police Chief of Detectives Robert Boyce says the opportunists are not attacking their own cities.
We see places from Iowa, Minnesota, Colorado. This is a tourist city, there's no question. But this is a bad time for tourism right now. Why are they coming into the city?
Global news 24 hours a day on air and on Quick Take by Bloomberg, powered by more than 2,700 journalists and analysts in more than 120 countries. From the Interactive Broker Studio, I'm Amy Morris.
Imagine being denied an apartment because of your religion, or your race, or because you have children, or a disability.
It's so wrong. Yes, but who has the power to stop this?
You do. Each of us has the power. The law is on your side. It's illegal for landlords to discriminate because of race, color, religion, sex, national origin, disability, or familial status. If you suspect that you have experienced housing discrimination, file a complaint with HUD immediately so we can investigate it. Fair housing is your right.
Use it.
To learn more, visit HUD.gov/fairhousing. That's HUD.gov/fairhousing. Or call 1-800-669-9777. 1-800-669-9777. A public service message from HUD in partnership with the National Fair Housing Alliance.
Why do hedge funds and other alternative managers rely on Pershing for a highly personalized experience? Mark Alderati, a managing director at BNY Mellon's Pershing and head of Prime Services, explains.
In today's fast-paced environment, where the only constants are change and volatility, you need a prime broker who's both steady and agile, focused on supporting your needs so that you can focus on growing your business and producing results. Exceptional client service and advocating for our clients is at the core of what we do. Our award-winning high-touch team is just one of the benefits of working with BNY Mellon. We help alternative investment managers create great experiences for their clients. Whether it's customized financing, securities lending solutions, platform access, or outsourced trading, BNY Mellon's Pershing is a prime broker who's committed to this business and dedicated to meeting your evolving demands.
To learn more about the unique and industry-leading solutions for hedge funds and other alternative managers, visit Pershing.com. Pershing LLC. Member FINRA, NYSE, SIPC.
Influential conversations from Bloomberg Television.
You know that feeling when you get more than you expected? Like discovering that the box of chocolates has a whole other layer underneath? or scoring extra poppadoms with your takeaway, or joining Tesco Mobile and finding out you get the latest phones and 99% UK network coverage. Yeah, that moment feels good, right? Tesco Mobile. Every little helps.
99% 4G population coverage indoors and outdoors across UK.
If you can build that flat-pack wardrobe without looking at the instructions, you've still got it. If you can manage 5 keepy uppies on your first go, you've without question still got it. If you can toss a pancake to the ceiling and not let it hit the floor, surely you've still got it. And if you can just about fit into those jeans you bought 5 years ago, you've definitely still got it. Brute, still got it.
This is a message from the government about the emergency measures to support the economy during the period of disruption caused by the coronavirus. To help you, your business, and your workers affected, you can apply for cash grants, business rate holidays, statutory sick pay relief packages, as well as the coronavirus job retention and self-employment income support schemes. For information, go to gov.uk/business-support now.
I don't think we'll have to. We have very strong powers to do it. The National Guard is customary, and we have a very powerful National Guard, over 300,000 men and women, and we can do pretty much whatever we want as far as that. But as far as going beyond that, sure, if it was necessary.
The President of the United States from New York City this morning. Good morning to you all. Alongside Tom Keene, I'm Jonathan Ferro, together with Lisa Abramowitz. This is Bloomberg Radio and Bloomberg TV. This is Bloomberg Surveillance. Tom Keene, a point of massive discussion this week, the most effective way to protect cities across America.
Yeah, absolutely. There's no question about it. And, of course, politicians front and center on this. Joining us right now, getting right to it on this busy, busy morning, the Lieutenant Governor of the Empire State, Kathy Hochul, joins us this morning. Kathy, what are you going to work on today to move the trend forward? We've gone from rioting and looting to what was called relative calm to an even calmer Wednesday night. What is next for you and the governor?
Well, the next step is to really address the concerns of the community that have finally come into a forefront, and it's a tragedy that it took the murder of an unarmed African American and the streets of Minneapolis to get the national attention. But if that's what it took, it's where we are today. We are talking about how we can address the inherent criminal justice injustice system that we now have that African Americans are subjected to and white Americans are not. And so we have an agenda of national reforms that we believe should occur. I believe that when we start taking concrete action, that will address many of the concerns of the protesters. They will feel that they've been heard. And this conversation has to begin in earnest starting today. We have to ban excessive force. We have to have independent investigations of police abuse and disclosing disciplinary records. These are things that the governor and I have proposed in the state of New York, and they should be national. So that's what we do. We start cleaning up the streets. We start giving people hope that we're going to go forward. And we also have to make some major systemic changes in order to take this national moment that has focused the world on what's happening in our country and come out better for it.
Lieutenant Governor, it is an ageless tension between governors and mayors. It goes back in New York State at least to Governor Clinton and the 3-day trip up the Hudson to Albany. That doesn't happen now. Now it's immediate. Give us an update on the tension between your offices and Mayor de Blasio of New York City.
There's certainly issue by issue. I mean, literally just a few days ago, Mayor de Blasio did a joint press conference with the governor to talk about how far we've come in eradicating the virus and how we're ready to open New York City, the first phase starting literally on Monday, which is just such good news for New Yorkers that are desperate to start getting back to some semblance of normal. So they truly do have a working relationship. They can disagree with each other. Everybody can disagree. But when it comes down to getting the job done for the people of New York, they're able to get it done. And I think the evidence is what we've been able to do with eradicating, working on the coronavirus together. That was intensive teamwork from the state and city officials, and our teams have worked together for the last 3 months on a day-to-day basis. So it's really case by case.
Lieutenant Governor, let's talk more about the reopening that is supposed to happen on Monday. There's a question of if you reopen, will they come? And a big part of that question is the MTA, the subway system. Will it be prepared to take an increased number of riders with respect to hygiene as well as service? How close are we to that?
Yes, and you're absolutely right that we knew that we could not reopen society, reopen the economy without the ability to get people safely to their jobs. And yes, we've had a scaled down service, and we've had the subway closed from the middle of the night down to 5 a.m. in order to do unprecedented cleaning. You thought our subways need to be cleaned. They have been sanitized top to bottom by individuals that have just been working really through the night. So we're going to continue those processes. We're going to add more trains. We know that there'll be increased capacity, but people are going to be anxious. You're absolutely right. They cannot get on unless they're wearing a mask. We hope that people will be using hand sanitizers and, to the extent possible, social distancing. But if you have the mask on you, we now know that that'll protect you. Again, there's more information out there than we didn't even have 3 months ago. 3 months ago, we did not know that mask was the primary way that you can stop the spread. People said it's all on surfaces. Well, we're learning a lot, and we're cleaning the surfaces, requiring masks, and we will get people to their jobs in New York, because when we start opening, it's going to be in a phased approach where it's manufacturing, construction, some very limited retail at first, so people start getting acclimated to the new system. Then phase 2, which most of upstate New York is in right now. I'm in Western New York, and we just started phase 2 this week. That's all retail shopping. It's office spaces. I think you're going to see a lot more of that, but truthfully, we've talked about this on the show before. There's going to be a different mindset when people have the ability to continue working from home, at least perhaps for a couple more months. So I think it's going to be a more gradual opening, that people won't all of a sudden descend on the subway system and overload it. But if that becomes the case, we're prepared.
Lieutenant Governor, I just wanted to wrap up the conversation by talking about lessons learned with you. I'm a guest in this country, but New York City is my home, and I, like many people, was shocked to see the looting that took place on Fifth Avenue, a place that you cannot walk down without usually bumping into a police officer. What happened the other night, and what have we learned from it?
Well, the governor addressed this, and he said that, reminding everyone that New York City does have the finest police force in the nation. They are well trained. There's 38,000 of them. And the question became, were sufficient number of individuals from the police force deployed on these early nights when there was looting going on? And, again, separating out the legitimate right of individuals to protest. Our country was founded on a protest. I don't want to remind anyone about the Boston Tea Party, but, we by nature are going to stand up to oppression and stand with each other when others are opposed or oppressed. And that's in our DNA as Americans. So the right to protest is something that's enshrined in our Constitution, and we hold very dear. But that does not give anyone the right to commit criminal acts, and they must be stopped. And we need to regain order to ensure that the safety of people's lives, people's communities, and their businesses. So we've now regained that control. It's important, but it sends a message to the rest of the world that we also support legitimate protests. People have the right to bring their grievances to their government, to society, and we in government have a responsibility to address them.
Lieutenant Governor of New York, Kathy Hochul. Kathy, fantastic to catch up with you. Thank you very much for joining us. Tom, I'm not sure what the Boston Tea Party was. That wasn't something we were taught in schools back in the United Kingdom. What is that? What happened?
The Boston Tea Party. John, you know what you need to do? I think over the 4th of July weekend, and I'm sure everyone listening on radio and TV would really agree with me in this. John Farrow, you need to read Johnny Tremaine. I just think, you, a Budweiser in your hand, or even better, a Narragansett lager beer, or a Sam Adams.
Oh, yes.
Yeah, you need a Sam Adams.
100%.
A Sam Adams, and you need to read Johnny Tremaine to finally
that was a lesson
become a gentleman of Boston.
How to deal with a rude British journalist live on air, live on Bloomberg TV and radio from New York City this morning. Good morning to you all, with an ECB decision just around the corner. Looking forward to being here with you through the morning right here on Bloomberg.
Have you wanted to speak a new language, but you thought it'd be too hard? or take too much time? Then go to Babbel.com, download the app, and try it for free. In just 15 minutes a day, you'll be on your way to speaking a new language in just a few weeks. And right now, you can try Babbel for free. Babbel starts out teaching you words and phrases by matching them with pictures. You won't believe how easy the interactive program is. Soon the sentences get a little bigger, and before you know it, you're having simulated conversations voiced by native speakers. And because Babbel is crafted by language experts and uses the spaced repetition method, in just 10 to 15 minutes a day, you'll be speaking the language of your choice with real confidence. With Babbel, you can speak a language. Just go to Babbel.com and start your first lesson in the language of your choice for free. Download the Babbel app or go to Babbel.com and try it for free. That's BABBEL.com.
NJIT, New Jersey Institute of Technology, makes innovation happen. The university helped biomedical engineering professor Tara Alvarez launch a startup that may revolutionize vision therapy.
Our startup through NJIT is called Ocular Motor Technology. We create virtual reality vision therapy in a head-mounted display. So it's gaming, and basically we're sugarcoating the therapy so that children and young adolescents don't even realize they're doing therapy. To accomplish this, we need biomedical engineers, which are here on NJIT campus, computer scientists, artists, people that are into story development, and then we're collaborating with a lot of the large pediatric medical centers. This idea of a startup culture is extremely important to not just NJIT and the National Science Foundation, but also to the U.S. as a societal whole.
NJIT, New Jersey Institute of Technology. Learn more at njit.edu.
This is a Bloomberg Money Minute. Stocks are taking...
Where will 2020 take you? Somewhere where people care. About each other. About our planet. About creating a better world for everyone. And becoming the best versions of yourselves. Join a community of like-minded individuals at the University of Winchester. Make sure to accept your offer by the UCAS deadline and visit our website to find out more. See the bigger picture. Be the difference. Go to winchester.ac.uk.
The IBM Flash storage solution can be broken down into 3 S's. Speed. Retrieve data fast. Scalability. Grow your storage as your business grows. Simplicity. Easily migrate and integrate with existing systems. Oh, and there's a 4th. It's surprisingly affordable, with a recommended monthly price of £200 for 26 terabytes. Order by the 30th of June and pay nothing for 90 days. Visit ibm.biz/flash offer now.
This is a message from the government about the emergency measures to support the economy during the period of disruption caused by the coronavirus. To help you, your business, and your workers affected, you can apply for cash grants, business rate holidays, statutory sick pay relief packages, as well as the coronavirus job retention and self-employment income support schemes. For information, go to gov.uk/business-support now.
The force is strong in my family. My father has it. I have it. You have that power too.
For the first time ever, stream the complete Skywalker saga, all in one place. 9 incredible films, 1 epic story, only on Disney+.
The Force will be with you, always.
The Skywalker Saga on Disney+, now streaming. 18+ subscription required. T's and C's apply.
From New York City, this is Bloomberg Surveillance. For our audience worldwide, we're live on Bloomberg TV and radio. Alongside Tom Keene, I'm Jonathan Ferro, together with Lisa Abramowitz, counting you down to an ECB decision just around about 15 minutes away, Tom Keene. Widely expected to announce QE. Also looking forward to the forecast coming from President Lagarde in a news conference 45 minutes after the decision. The forecasts are not set to be pretty.
This is always underrepresented. I'm really glad you mentioned it, John. The forecast folks that come out around these meetings are very, very important. And you really wonder, John, how they will forecast price change of inflation or disinflation and the fear of deflation across Europe. It's decidedly different than the challenge Chairman Powell has in America.
And I'd argue it's likely the forecasts that are pushing this ECB to consider QE and pushing this market to believe that is what is coming in around about 15 minutes' time. There has been very little pushback, if any, from the ECB ahead of this decision that is what we won't get. Many people think it is what we will get. And if we don't get it, I think there's massive scope for disappointment and a downside surprise at a series of markets in Europe. Looking at this market right now, euro dollar 112. It was just 108 a couple of weeks ago. We've had a huge move higher. We unwind some of the move this morning, though. As the session grows older, the dollar gets just a little bit stronger. Euro dollar sitting right on top of that 112 level. Elsewhere in the equity market, equity futures still negative, down 13 points after a monster cyclical rally over the last 3 days. We're down 0.4%. And in the bond market, 10-year Treasury yields, we've had a real lift to this Treasury curve, some steepness through it too. Your 10-year yield basically unchanged on the session right now, Tom, at 0.74%.
Very good, John. And as we prepare for the ECB and we prepare for what central banks will do now, and when this crisis of pandemic is over, the unemployment crisis as well, we need to speak to experts steeped in the history of what central banking do. The Peterson Institute has put together a terrific set of economists. You know, often Adam Posen joins us, and of course, Olivier Blanchard. And we are thrilled from Williams and MIT to have with us David Wilcox today from the Peterson Institute with his wonderful work at the Fed, particularly in statistical research. David Wilcox, how do you perceive the path of how any central bank will unwind themselves from this great accommodation?
Thanks for having me this morning. It's an important question. Central banks around the world, and particularly here at home in the United States, have made clear their determination to use their tools to the fullest. The Fed has more operating room, more latitude for taking action than some other central banks around the globe, the ECB and the Bank of Japan, for example. The Fed really needs to be careful not to let up on the accelerator pedal too fast. We're coming off a period of about half a dozen years where inflation ran below the 2% objective. The Fed really doesn't want to allow that to perpetuate.
David, you are channeling Professor Blanchard. Of course, he's appeared with us many times, and you know when he was at the International Monetary Fund, he said the same thing. There can't be a fear of reflating. We need the courage to reflate. But do you, David Wilcox, see any evidence that we can policy-wise reflate? Is there proof that we can reflate into any future?
I think we've got a tremendous amount of practical experience from the real world. This isn't just theoretical stuff that takes place in the graduate seminar room. We know that if central banks put their foot down on the accelerator pedal hard enough for long enough and make clear that they are absolutely determined to achieve their objectives, that results will follow. Now, sometimes it takes longer than anyone would like, but we know that central banks have to take responsibility for the outcomes, and if they persist, they will achieve those outcomes. And we also know how critically important it is today that those objectives be met, because the lived experience of tens of millions of individuals in the United States today, particularly low-income individuals, particularly persons of color, is that they are bearing the brunt of this downturn, and it's incumbent on policymakers of all kinds, fiscal policy, monetary policy, to do their utmost to turn the situation around as rapidly as possible.
David, the answer is always do more on the monetary policy side. At what point does that answer actually become counterproductive?
I don't think we're there yet. The Fed has expended a tremendous amount of its artillery. There's not a dramatically greater amount left for the Fed to do. The burden at this point is on fiscal policymakers. My concern really is not that the Fed will give up the task before it. My concern is that fiscal policy fatigue may set in, and now is exactly the wrong time for fiscal policymakers to get a case of fiscal rectitude. They need to understand that the cost of servicing debt is historically low, with interest rates low today and set to remain low for decades into the future. Now is the time to ensure that this downturn is limited in scope, limited in duration. We need to bring the economy back. We need to sustain households and businesses through this extraordinarily painful and difficult period.
And David, talk to me about how the nature of that fiscal stimulus needs to change now this economy is reopening. From what you've seen, what do we need to see in the next several months?
Well, my greatest concern is some of the looming fiscal cliffs that are written into current legislation. For example, the federal supplement for unemployment insurance is slated to expire on July 31st. That's the $600 per week surplus payment on top of the normal state unemployment insurance benefit. There are tens of millions of people at this point who are relying on supplemental unemployment insurance benefits as a lifeline to carry them through this period. The PPP program, the loan program for small businesses that was under certain conditions slated to convert into a grant, the spend out from that program, which was about $660 billion in aggregate, that spend out will come to a close here sometime probably for most businesses in the third quarter. So the fiscal impetus that we've delivered already is having a positive effect now, as bad as conditions are. The thing that's pretty scary is that positive fiscal effect will dissipate pretty quickly here as we move into the second half of the year.
We're speaking with David Wilcox, Peterson Institute non-resident fellow. David, given the fact that you spent almost 2 decades at the Federal Reserve examining statistics, trying to get a good read on the situation, can you tell us just how difficult it is to get an accurate sense of how deep the job losses have been? A lot of questions about the comprehensiveness of the data. Is there disparities between what's coming out of the states, what's coming out of the federal government? How clear a picture do we have?
Well, we have a very clear picture in one respect, and that is that the bottom has fallen out of the labor market. And as a result, you've seen the Fed do its utmost to exercise the full range of tools available to it. We have never seen unemployment insurance claims accumulate to 40 million claims over a period of a handful of weeks. We have never seen the unemployment rate rise from a historically low 3.5% now into the mid-teens, according to the official number, but closer to 20% once one adjusts for a classification error in last month's report. We have never seen industrial production in 100 years worth of monthly data drop by the amount that it did. We have never seen personal consumption spending drop by more than 13%, and that was on top of a decline of more than 6% in the prior month. These are unprecedented adverse figures, so the Fed knows that it needs to be moving with all possible speed, force, and vigor.
David, there is a question, though. Yesterday's ADP numbers came out, and they were still terrible considering the fact that millions of people had lost their jobs in May, according to that figure, but vastly below the expectation, less than 3 million versus 9 million jobs lost. A lot of people saying perhaps this indicates a lack of visibility into how quickly people are getting rehired, and they are getting rehired faster than some people are expecting. Have you seen any evidence to that in the indicators that you're looking at?
It's possible that that's happening. Let's first of all keep a perspective on just how awful a job loss of 2.1 million is in a single month, if indeed that's borne out in the Labor Department figures that will be released tomorrow morning at 8:30 Eastern Time. During the financial crisis, we had job losses that were in the neighborhood of 700,000 per month. So even if tomorrow's figure turns out to be 2.1 million, that would be 3 times worse than any monthly figure from the financial crisis. And that, of course, comes on top of a catastrophically awful figure the month before. It'll take a while to sort out exactly how bad the situation is. Unfortunately, the situation is so bad that the fine details don't really matter here. What is known is that the economic devastation is vast and that policymakers need to be moving with a great deal of force and determination to turn that around.
David Wilcox at the Peterson Institute. David, fantastic to catch up with you, sir. Thanks for joining us ahead of this ECB decision just moments away. David, thank you. Tom, that decision around about 4 minutes away, and what an expensive mistake from several months ago when Christine Lagarde, the ECB president, said we are not here to close spreads. That feels like a lifetime ago, and now they are throwing absolutely everything at that European bond market.
Well, she's at the learning curve, and let us remember, and it's a history lesson, John, you're expert at this, folks. The fame of John Farrow on the lawn at Frankfurt is well known, but the truth of the matter is, John, it's 27 fractious countries. It's not the United States. It's 27 fractious countries led by that core of Austria, Germany, France I'm not going to put into it. I guess the Netherlands in there as well. It's a whole different chemistry she has to face.
Lisa and I both know that when you bring up where I used to live, Tom, in Europe, you're not giving me a compliment. It's usually you trying to get me to go home. We'll talk about that in just a moment. From New York City this morning, good morning to you all. The ECB decision minutes away. This is Bloomberg.
With the First Word News, I'm Rishka Gupta. A stunning rebuke to President Trump last night from his first defense secretary. Jim Mattis has ripped into the president, saying he has divided the nation and misused the military. The retired Marine general said that Americans must reject those who make a mockery of the Constitution. President Trump responded on Twitter. He said Mattis's primary strength was not military, but personal public relations. In Minnesota, 4 former police officers present when George Floyd died faced new charges. The charge against the officer who knelt on Floyd's neck has been upgraded to second-degree murder. The other 3 were charged with aiding and abetting his death. All 4 officers were fired last week. In Los Angeles, up to $150 million will be cut from the police department's budget. The money will be used as part of a broader effort to reinvest more into the black community. Los Angeles spends almost $1.9 billion a year on its police force. The mayor also said he will support another demand of activists creating a special prosecutor to review police misconduct cases. And the price of oil has retreated from a 3-month high. The unity of the OPEC Plus coalition is being threatened by a long-running feud over complying with production cutbacks. Saudi Arabia and Russia have a preliminary deal to extend those curbs, but it is conditional on other countries making deeper cuts to make up for their past non-compliance. And a group of warehouse workers at Amazon.com is suing the online retail giant. They claim its working conditions put them at risk of contracting the coronavirus, as well as their families. The lawsuit focuses on a distribution center on Staten Island, New York. Amazon says it's reviewing the claims. Global news 24 hours a day on air and on Quick Take by Bloomberg, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Rishka Gupta. This is Bloomberg.
From New York City for our audience worldwide, live on Bloomberg TV and on Bloomberg Radio, this is Bloomberg Surveillance, moments away from an ECB decision widely expected to announce a bigger QE package, with the Christine Lagarde news conference just 45 minutes away. Your ECB rate call unchanged. That's what's expected. The depot rate at negative 50 basis points expected to stay right there. This all comes as we've seen a massive move in euro-dollar over the last couple of weeks. Euro-dollar right now 112. 2 weeks ago, 108. Some real enthusiasm on the continent just over the last couple of weeks. Will that enthusiasm continue? Let's get that ECB rate decision. It is 7:45 Eastern. Let's head over to Frankfurt, Germany, and catch up in Berlin, actually, with Bloomberg's Matt Miller for that ECB decision, which comes out just a little bit late, Matt Miller. Not the first time we've seen this. This set to drip feed out over in Germany.
Yeah, absolutely. And by the way, during this coronavirus lockdown, Berlin and Frankfurt are pretty much considered the same place. Everything's done over video conference. The ECB, of course, leaving its main financing rate unchanged at 0%. Its deposit facility rate unchanged at negative 50 basis points right now. It has added 600 billion euros to the pandemic emergency purchase program. So a little bit more than we had been anticipating. 500 was the number that most people were, or that markets had really priced in. So the ECB adding an extra 600 billion euros to its pandemic purchase program. Very interesting. It's going to buy 20 billion per month plus 120 billion this year under the asset purchase program. So it is extending the time as well out to at least June of 2021. And it says it's going to be flexible. Always good for a central bank to leave itself some optionality there. But I think it's interesting, John, that they have, at a time when so many are saying it's not really necessary, you don't have the kind of tight financial conditions that we had a month ago or 2 months ago, but they want to deliver a signal and maybe give some of that, try a little bit more for some reflation, as the ECB is doing for the last 10 years.
Matt, makes you wonder how bad the forecast will be when we get them in the news conference in about 45 minutes' time. Looking at the price action, I go to two places immediately, euro-dollar and the front end, the Italian bond curve. Looking at euro-dollar, actually seeing the euro strengthen off the back of this. Matt, that's interesting to see the euro correlate positively with more QE. And I think the Italian bond market bid at the front end is pretty intuitive, self-explanatory. But Matt, what do you say back to that? Just the idea that the euro is positively correlated with more QE from this ECB.
Well, it's interesting. We saw the euro strengthen when we got wind of the fact that Germany was going to pass a bigger stimulus program than had been anticipated. Remember, yesterday and the day before, Angela Merkel, the CDU, and the SPD were trying to work out somewhere between 50 and 100 billion euros of stimulus. They came out with 130 billion euros of stimulus, and that had given a lot of power to the euro. So right now, I think what the market wants to see in order to add strength to the currency is strength for the economy.
Our simulcast here on radio and television, we say good morning to all of you across America. With us, Matthew Miller, ensconced in Berlin, toughest tour of duty here at Bloomberg News, and of course this on the ECB, and as we move to the press conference here in a bit. Carsten Bresky scheduled to be with us here in a bit as well. Matthew, I've got to rip up the script and go to Chancellor Merkel and the flap that we've seen over the last number of days on the G2, the G7. One of your charms is your encyclopedic knowledge of the German press. Does the German media and the German people, do they support Angela Merkel as she takes on the president of the United States?
Yeah, no, absolutely. She has gotten a real boost in her popularity. Not so much because of the way she deals with Donald Trump, but because of the way she has dealt with the coronavirus. You know, Germany hasn't been hit very hard at all. We've been out of lockdown for a number of weeks now. I have to say that in Berlin, with the exception of the fact that you see a lot of masks, everything is pretty much back to normal. I went out to an Italian restaurant a couple nights ago, and it was pretty full. So you can go to a restaurant, you can go to a bar, you can now go back to the gym, which I'm going to avoid. But, you know, we have the German economy starting to hum back along now. And the concern about unemployment isn't that it falls to a record low, but that it falls to a 2015 low. So the German people, I think, are very happy with the way Merkel's leadership has handled this coronavirus.
Matthew Miller, thank you so much, reporting from Frankfurt here on the ECB with important German perspective as well. John, I don't mean to get into the ECB discussion here, but there's just so much odd dynamics right now between these European leaders and the president. The backstory off the headlines in the major American newspapers is extraordinary on how the European leaders have, quote unquote, given up on this president.
Well, not just that, Tom, but maybe now the time to be talking about that. Let's talk about what's happening in the Eurozone and with this monetary policy. Carsten Bresky's joining us now from ING. Carsten, fantastic to catch up with you, sir. Just to see the euro positively correlated with more QE. Talk to me about that, because I think initially this seen as putting a lid on redenomination risk. Does it achieve that?
I must say this is a bit of an economic policy fireworks that we're having. So last night, the German government with an enormous fiscal stimulus package. Now the ECB adding 600 billion euro on its PPP program, also announcing reinvesting the proceeds from this PPP program. So this is huge, and I must say really shows that the German policy makers from both fiscal and monetary are working together.
Karsten, there's this weird tension that central banks are facing right now, over-delivering, over-promising at a time when there is not necessarily the degree of market stress that would necessitate such intervention. We're seeing the Fed not even deploying a lot of the firepower that they have. The ECB perhaps poised to do the same. Can you talk about the logic there, that the signaling can be so loud that it causes a market reaction that doesn't necessitate the deploying of that firepower? Do you expect that to be the reality for the ECB?
Especially when it comes to the ECB, I think this is what they've learned from the past. This is what they've learned from the 2008-2009 crisis. You rather announce big numbers so that there is no speculation at all against the ECB's role as lender of last resort. I think that's also the lesson the ECB drew from the mid-March episode, in which Lagarde was a bit more hesitant, a bit more cautious to say she wants whatever it takes. She would be there to limit spreads from widening. So I think they've learned their lesson. They're now going out saying it doesn't make sense at all to speculate against the ECB, against the Eurozone. They've now bought time until mid-2021.
Karsten, John from England emails in. John, thanks for listening today, and says, Tom, stay on the ECB, not on Trump politics. I'll do that. Karsten, as we look to the ECB and the press conference, what will be the key distinction that Christine Lagarde will try to make? You know, the cliche of, threading the needle. What's going to be that key thing she's going to try to do today?
I think what she's going to try to do today is really kind of showing her commitment, showing that she is now really the ECB president everyone should listen to, that there is no doubt at all about her commitment, her determination to do whatever it takes. If she managed to do that, then I think we're pretty much fine here, and then she can just give some compliments to governments, which came up now, government leaders who came up with a fiscal policy response to this crisis.
Clearly, Karsten, the main objective here is to keep the door wide open for fiscal stimulus on the continent. Yeah. We have had a lot of happy talk over the last several weeks about a plan that was announced from Chancellor Merkel and the leader in France. I think it's absolutely remarkable that we have so much happy talk when they've announced a plan that hasn't been agreed and is nowhere near being enacted. Is that going to happen?
It is going to happen, because I think what is the most remarkable, and we've also had these discussions in the past, and Germans were the masters of austerity, and we all doubted that they would ever change. I think it is remarkable that the Germans have changed. It's not only that they're engaging in the enormous fiscal stimulus for the sake of their own country, almost 10% of GDP cash out fiscal stimulus, but they've also turned around and they see that they have to bear and carry this responsibility for Europe, for European integration, for transfers, and therefore I think this recovery plan will also happen, because the most remarkable change over the last 2 months has happened in Berlin.
Karsten, fantastic to catch up with you, sir, on an important moment for the continent. Karsten Baleski there of ING. Euro dollar nicely through 112 at 112.50 right now, yeah. Tom Keene. A stronger euro. No idea if this holds through the news conference, but quite clearly the objective of the ECB, in terms of perception, how people perceive the objective to be, is to keep a lid on redenomination risk and keep the door wide open for any issuers who want to do more bond issues and get out there and boost fiscal stimulus.
For a non-global Wall Street audience, let me just explain what Pharaoh just said here. John was talking about the euro to 4 decimal points, and those last 2 decimal points called pips really, really matter. When I looked at my terminal, it was 112.22, and as John says, even those little bit of decimal point moves up to 50 really, really matter. And John, I would respectfully suggest signals good news for Christine Lagarde.
If it holds, I think that's the story here. Yes, I think there's some enthusiasm for the continent and euro-denominated assets because of what the ECB is doing. What we want, though, is follow-up from fiscal. That's what's going to make the difference here. We've had a ton of monetary policy thrown at the continent over the last 10 years that has only achieved so much. Looking at this market, beyond the euro, I'd say just look at the front end of the Italian yield curve. 2-year yields in Italy down 16 basis points. On today's session alone, we're basically cutting them in half as a more supportive, flexible ECB flexes its muscles on the asset purchase program side of things. That news conference is 35 minutes away. You will hear the start of it right here on Bloomberg TV and on Bloomberg Radio. And the economic data in the United States of America moments away as well. From New York, this is Bloomberg.
Asset managers who sees change.
Get your cook on with Asda. With Uncle Ben's rice, 250 grams for just £1. And our Butcher's Selection chicken breast fillets, only £3.40 for 650 grams. Why not whack it in the wok? At Asda, we're committed to low prices every day on the quality products you need. Asda. Selected stores and lines subject to availability.
Looking for your daily fix of NFL news and analysis?
In that. So we had to blow it up with the Super Bowl predictions instead.
Look no further than the Pick 6 podcast, where CBS sports writer Will Brinson gets you up to speed with what's trending in the NFL that day, so that you're always in the know.
Yeah, it's pretty revealing of Brince's methodology for predictions. When he gets mad at people for predicting good teams are going to win the Super Bowl or good players are going to win major awards. That's how you wind up.
Search Pick 6 on TuneIn to listen.
With millions of podcasts dropping new episodes all the time, how do you keep up with all your favorites? TuneIn makes it easy. Simply head to the home screen and find your new episode section to see the latest additions.
Are you fully informed on the NBA? On the NBA Hangtime podcast, veteran sports writers Sekou Smith and John Schumann analyze the latest NBA news, storylines, and discussions with guests from around the basketball universe.
Isaiah Thomas joined us here on the Hangtime podcast. Isaiah, good morning.
Everybody's doing well. As you know, my daughter tested positive.
Search NBA Hangtime on TuneIn to listen.
You love TuneIn for live breaking news from CNN, MSNBC, Fox, CNBC, and more. But when you can't catch your favorite show as it airs, it might just be a click away as a podcast. Search your favorite news station to explore all the on-demand news shows on TuneIn.
Ready to talk brass tacks on what's happening in Major League Baseball? Turn to the Effectively Wild podcast from Fangraphs for daily statistics, analysis, and commentary.
One team will say, yeah, we're going to keep paying minor leaguers their stipend, and another team will say, we're going to extend the stipend through this month, and then another team will say, nope, we're cutting them off. So are extending it at least through August, which would basically be the end of the minor league regular season.
Search Effectively Wild on TuneIn to listen.
Buckle up, race fans.
NASCAR is back in the driver's seat.
And you can cut straight to the action here.
With the Performance Racing Network on TuneIn, you can hear PRN's live coverage of some of this year's top events.
As NASCAR's top drivers, Kevin Harvick,
Clint Boyer, and more get back on the track.
Search Performance Racing Network to listen and see upcoming races. Want to relive the glory of college football?
Pulls over a man into the end zone.
Come explore TuneIn's classic game replay collection to hear ESPN's complete coverage of the 2019 New Year's 6 bowl games. Don't miss your chance to re-experience the Rose Bowl, the 2020 National Championship featuring Clemson and LSU.
There are going to be 2 champions on the field tomorrow night. There's going to be one team hold up the trophy.
Pass to the 5! Touchdown! Search classic game replays to listen for free.
We always talk about the losers in a trade war.
You benefit if you're just further away from China.
So that you can too.
What are the ramifications if she crumbles or doesn't crumble?
Bloomberg Radio, the Bloomberg Business, Radio.com, and iHeartRadio apps, and BloombergRadio.com. Bloomberg, the world is listening. From the financial capital of the world, 24 hours a day at Bloomberg.com, on the Bloomberg Business app, and on Quick Take by Bloomberg. This is Bloomberg Radio.
I would find it very difficult to argue that we're going to have a V-shaped recovery. The closest anybody's come to it is China, and it doesn't look like a V to me.
You may want to reduce the suffering because there's a risk that the whole system will come crashing down.
Since monetary policy tools are really about supporting economic activity and
driving the economy to higher levels of employment.
This is Bloomberg Surveillance with Tom Keene, Jonathan Farrow, and Lisa Abramowitz.
Good morning, everyone. Jonathan Farrow, Lisa Abramowitz, and Tom Keene. This is Bloomberg Surveillance. Thrilled you're with us on Bloomberg Television, Bloomberg Radio from coast to coast, and worldwide as well. Particularly good morning to all of you working at home through this pandemic and listening to our digital content. The news flow, well, it has been extraordinary through this pandemic and ever-changing, and that is true of this Thursday morning as well. We'll speak to our Kevin Cirilli about the events in Washington over the last 24 hours, and certainly the comments of various members of the military about the commander-in-chief. We'll also look at the ECB, that important press conference coming up. John will brief us again on the difference of 500 kajillion versus 600 kajillion dollars. But in 29 minutes, we'll get a reaffirmation of a troubled American labor economy. It is extraordinary. And John, to be honest, I have lost perspective of the tragedy of 1 million here and 1 million there of unemployed Americans.
Everybody has, Tom. Not through malice, just because it's so difficult to digest and comprehend numbers this large. We're set to see claims come in and around 1.8 million. That's the median estimate. What we're hoping to see is to see claims roll over. But I thought yesterday was absolutely remarkable to get that ADP report of negative 2.76 million. Yeah. And for people to call that a big beat, an upside surprise. Can you imagine me telling you at the start of this year, Tom, that a number like that would be called a big beat, a massive upside surprise?
And, of course, the backdrop here, folks, is the equity market, S&P 500, 7% below the Valentine's Day peaks that we saw. John, and this links over to the ECB and Christine Lagarde's challenges, is with diminished demand and with high unemployment, you get a thrust of disinflation and lower wage growth or even wage decline. I mean, the disinflation feel here is part of the core story, isn't it?
It is, and we'll get the forecast in 28 minutes' time from ECB President Christine Lagarde. Initially, she was putting pressure on the fiscal policymaker, and I think she's learned the hard way that in Europe it's really difficult to engineer because the bond market will push back. And the Italian bond market did push back, and they had to come in and close spreads in a way that I don't think she anticipated they would have to. The QE plan that they announced a little bit earlier this morning, bigger, the expansion bigger than many people on the street expected. Euro positive initially, we roll over just a little bit in the last 2 minutes or so, and a nice bid coming through the front end of the Italian bond market too.
Lisa, you sent me a note moments ago on five-year forwards. What do you see in the bond market indicators that matter right now?
Well, John raised this really good question. Why is the euro gaining, strengthening on the heels of an incredible fiscal and monetary stimulus or rescue financing package? Typically, this is viewed as inflationary and a debasement of a currency. Not this time. It is not being viewed as inflationary. If you take a look at the five-year forward break-evens in Germany, this is a measure of inflation expectations over the next 5 to 10 years. They're below 1%. We're looking at 0.93% over the next 5 to 10 years, even with unprecedented fiscal and monetary rescue financing, Tom. It just highlights we are fighting deflation. We are not at risk of inflation. That is the message from markets.
No question about that right now. Joining us now, our Chief Washington correspondent, Kevin Cirilli. Kevin, too short a time with you in this huge news flow this morning, but I'll cut to the chase. What is the president's agenda today? Does he know right now what his agenda is today?
I'll keep this tight. He's going to be meeting with several members of his administration, but it's unclear whether or not we're going to hear from him directly. I do just want to note that based upon my reporting, I think that you're going to see a push of bipartisanship for some structural changes over the next month to be included in legislation coming from Congress in terms of police enforcement in this country.
Kevin Cirilli, down in Washington. Great to catch up with you, sir. An important conversation down in Washington. We appreciate your time. I want to bring in Greg Battle of BNP Paribas to get the view on this market. A massive move in the front end in Italy, Greg, off the back of this ECB decision to do even more. Were you surprised that they went above and beyond those expectations? Because I think many people were. And Tom, initially your reaction as well, please, from 15 minutes ago. We expected 500 billion. We got 6.
Well, my thing here, John, and I got an important question. I'm going to interview John Farrow right now, folks. We can do that on radio and TV. John, I see an ECB fighting being un-American. How does the Bundesbank and the core economies, John, how do they react to this new Anglo-American-like central banking?
I think they've got to come along with it. There's no pushback left. I think it's really interesting that we had some pushback from Germany's top court just several weeks ago, and the ECB follows up in its next meeting by expanding QE. And not just expanding QE, but doing it with a pandemic emergency purchase program. This is a much more flexible program where they can do a whole lot more on the QE side and push a lot of that into places like Italy and weight it just a little bit differently. To see the move in Italy is just phenomenal. 2-year yields down by around about 18 basis points off the back of this. So your yield now in Italy, 2-year paper, 0.173%. We've basically cut them in half in the last 5 minutes or so.
Right. And John, help our American audience here. We all understand that the labor model of Europe is so different than America. Do they have the grimness of unemployment that we're going to be talking about in 25 minutes?
Absolutely, and they have the disparity as well. There's much more pain on the periphery of the continent, Tom, as there has been over the last 10 years too. And I think what we've seen from the ECB under Draghi and now under Lagarde is that they are willing to do a whole lot more to support the periphery, to keep the bond market wide open. What we need to see at the continent level is for them to agree to allow these states to do more and to make sure that they're not just borrowing to support these economies, that we have some kind of fiscal transfer. That's the renewed effort of the last several months. I know some people are hopeful. I'm conditioned by my experience of the last 10 years. That hope gets smacked around quite a lot very quickly.
Now, John, as you know, there's something about the first chart you look at every morning. This morning's chart was the Standard & Poor's 500 made up of a few stocks. I can't remember their names right now, but there's 4 or 5 stocks that make up like 80% of the 500 stocks, and everybody else is trailing behind. I'm kidding. But we're 7% under where we were Valentine's Day, an extraordinary bull market off the March bottom. Greg Bottle of BNP Paribas, he knows the mathematics of this. He knows the derivative dynamics of this equity surge. Greg, let me begin with first principles. Is it the renewance of a bull market?
I don't think so. I view this as a very large bear market rally, but I also think we need to think about this in terms of a two-speed recovery. You touched on it there. I think some of these mega caps, these oligopolistic tech companies, could potentially be in the start of a new bull market, while the rest of the market could still potentially have a much more difficult time ahead of it.
Greg, I want to talk about moral hazard. We were speaking yesterday with Bill Dudley, formerly of the New York Fed, saying that the Fed's actions do increase the risk of moral hazard. You could say the same thing about the ECB. As an equity strategist, how concerned are you that this moral hazard will lead to an overshooting and a crash?
Well, I think in some ways there are echoes of the late 90s. We had this policy response to LTCM where the Fed came in and cut rates, and really that drove the last legs of the bubble that resulted in the tech bubble in the late 90s and the subsequent bear markets in 01, 02. And clearly we have a situation where we've had real policy shock and awe, and some of the reasons that people are giving to invest now is that there is no alternative and you can't fight the Fed, even though fundamentals look terrible. And I think there's a real risk of moral hazard for equity markets.
Greg, something that Jim Bianco of Bianco Research said recently I thought was really interesting. It's about Goodhart's law, that once a measure becomes a target, it ceases to be a good measure. This whole market has become a target. What's it a measure of anymore?
Yeah, I think there's definitely a big disconnect in between the outlook for the U.S. economy and the outlook for the equity market. Tom touched on it there, the lack of breadth in the rally, that we have a handful of stocks now, these mega cap stocks that are driving the market directionally, and it's becoming increasingly divorced from the economy. Whereas I think when you look at some of the smaller mid caps, for example, or some of those even second tier large cap stocks, I think they're going to be much more wedded to the cyclical direction of the U.S. economy and the outcome that we get there.
Greg Battle of BNP Paribas. Greg, fantastic to catch up with you, sir. Appreciate your time this morning off the back of this ECB rate decision and ahead of what we expect to come a little bit later this morning. In about 20 minutes' time, Tom Keene, we will get initial jobless claims and continuing claims in America, and that will show you a labour market that is still suffering. That's what people widely expect to see in just a few moments' time this morning.
And then, of course, we go right on to the jobs report tomorrow. And I really can't convey, John, this moment in our history. The statistics, John, really are good statistics back to 1947. There is a lot of data back before that. And there's been other crises along the way. I don't mean to diminish that. But we have never seen the dynamics of the American labor economy like we're seeing right now. I hope we'll be more informed at 9 a.m. tomorrow.
An ugly data set expected again at the bottom of the hour ahead of payrolls Friday. And Lisa, all expectations that the central banks are the ones doing the heavy lifting at the ECB this morning, absolutely no different.
The question, and this has been raised by you and by Tom and by many in the market, is how much pressure is the ECB, is the Fed taking off of some of the fiscal authorities to do the heavy lifting that they need to be doing at this point? And I think, John, that is going to be a question going forward as we take a look at what's going on both with the European Union as well as in Washington, D.C.
From New York City this morning, good morning to you all. Alongside Tom Keene, I'm Jonathan Ferro, together with Lisa Brammitz. This is Bloomberg Surveillance Live on Bloomberg TV and on Bloomberg Radio. Still to come on this program, 8:30 Eastern, in about 18 minutes' time, we will have initial jobless claims in America, and we will have a news conference with ECB President Christine Lagarde right here on Bloomberg.
Now let's see what else is going on around the world. Here with the latest headlines is Amy Morris. Good morning, Amy.
All right. Thank you, Tom. Good morning. President Trump is facing a direct challenge now to his leadership from his current and former defense secretaries, who issued a pair of rare public dissents questioning the president's threat to use military force against protesters. Defense Secretary Mark Esper says he does not support invoking the Insurrection Act to quell protests using the military. And former Defense Secretary Jim Mattis has condemned his former boss, the president, over his aggressive rhetoric and strategy to quell the protests that erupted after George Floyd's death. Mattis says Donald Trump is the first president he's seen who does not try to unite the country and doesn't even pretend to try. Police are saying that violent criminal behavior that you may have seen happening during the protests are being carried out by caravans of well-coordinated criminals. Former New York Police Chief of Detectives Robert Boyce says the opportunists aren't attacking their own cities.
We see places from Iowa, Minnesota, Colorado. This is a tourist city, there's no question. But this is a bad time for tourism right now. Why are they coming into the city?
Investigators say these criminals are using social media to communicate. Former President Barack Obama is assuming a more public role as protests continue nationwide. During a virtual town hall, the former president urged every mayor in the country to review the use of police force policies and commit to report on planned police reform.
I want to acknowledge the folks in law enforcement that share the goals of reimagining policing.
The former president also called for calm and peaceful protests, telling demonstrators that a change in the mindset of the nation seems to be happening. And a memorial service is set for today for George Floyd, the start of a series of events to mourn the man who died while in police custody. Services will take place in 3 cities over 6 days, with a chance for people to pay their respects where Floyd was born, grew up, and died. The Trump administration came up a bit shy of meeting its goal of doing about 12.9 million tests in May. Health and Human Services says they got about 12 million done. We are powered by more than 2,700 journalists and analysts in 120 countries.
Elite advisory firms rely on BNY Mellon's Pershing to meet the needs of their most complex clients. Karen Novak, Chief Operating Officer at Pershing Advisor Solutions, explains how.
At BNY Mellon's Pershing, we bring customized insights and strategies to help you grow your advisory business and stay on the leading edge. We can support the needs of your most sophisticated clients with a full range of investment and wealth management solutions, from access to private banking to consolidated bank and brokerage custody. Learn why so many of the largest advisory firms turn to us for the financial strength and high-touch service that BNY Mellon's Pershing can provide. Are you well positioned to stand out from your competition?
Learn more at Pershing.com or call 800-445-4467. Brokerage custody provided by Pershing LLC and other services provided by Pershing Advisor Solutions LLC. Both members of FINRA and SIPC. Private banking and bank custody provided by BNY Mellon N.A. Member FDIC.
Jenny Liss, Jewish communal leader and philanthropist, talks about why she chose the Jewish Communal Fund for her family's charitable giving.
For a lot of people, it would be the convenience factor. I don't have to track anything.
If charitable giving is an important part of your life, JCF can help you organize your philanthropy with our donor-advised fund. A fund can be established with a minimum tax-deductible contribution of $5,000. Make grants to your favorite charities, and JCF handles all the administration and reporting.
At the year end, our board awards community grants from fees and endowment income to UJ's annual campaign. We also make gifts to specific organizations, the elderly, Holocaust survivors, the hungry. The fact that we come together as a community at the end of the year to build community, that's what makes us different.
Get better at giving back. To find out more about JCF's impact, visit jcfny.org and download the Giving Report. JCF, we have a gift for giving.
Influential conversations from...
This is an important update from the government about coronavirus. We all need to stay alert so we can control the virus and reduce the risk of infection. Staying alert means you must stay at home as much as possible. Work from home if you can. Limit contact with others. Keep your distance if you go out. And wash your hands regularly. Do not leave home if you or anyone in your household has symptoms. Stay alert. Control the virus. Save lives.
If you can build that flat-pack wardrobe without looking at the instructions, you've still got it. If you can manage 5 keepy uppies on your first go, you've without question still got it. If you can toss a pancake to the ceiling and not let it hit the floor, surely you've still got it. And if you can just about fit into those jeans you bought 5 years ago, you've definitely still got it. Brute, still got it.
Hi, I'm Dan from NatWest Manchester branch. We know life's hard right now, but if coronavirus has affected your finances, we're doing our best to make things easier. If you're a personal customer, you can request a 3-month payment break if you're struggling with your mortgage, loan or credit card. Or if you need help with an existing arranged overdraft, you could get £500 interest-free for 3 months. Remember, every one of us is here to support you. There are lots of ways we could help. Search NatWest Coronavirus.
Eligibility and conditions apply to payment breaks. Overdraft up to your agreed limit if lower than £500.
The Fed's monetary policy tools are really about supporting economic activity and driving the economy to higher levels of employment. However, that can actually cause financial asset values to go up, and that can actually exacerbate inequality. So the Fed's choice is not have a recovery, have less inequality, or have a recovery with buoyant financial asset prices and more inequality.
Bill Dudley, the former New York Fed president, weighing in on the Fed's action in the last 24 hours on this program. Alongside Tom Keene, I'm Jonathan Ferro, together with Lisa Abramowitz. We're live on Bloomberg TV and Bloomberg Radio. Tom, is it really that binary that the Fed's choices are to not have a recovery and have less equality, or have a recovery with buoyant financial asset prices and more inequality? Does it have to be that binary?
Absolutely not. It's public institutions finessing the message under great crisis. And of course, Bill Dudley is widely presumed to be a public officer, even though he has left the New York Fed. It's a lot more sophisticated than that, John, and certainly calmer streets for the last 2 days. But that doesn't take away from this nation's new and different inequalities.
Agreed. A sharp contrast between that and what we see in markets at the moment. Equity futures unwinding some of the gains over the last 24 hours. Down just 11 points on the S&P 500, negative 1/3%. As we get you set up for the opening bell in New York, just take a look at what's happening over in Europe in both FX and in the bond market as well. Euro dollar with a lift off the bottom through at 112.50 very briefly. A stronger euro off the back of more QE out of the ECB. Seemingly the objective here to put a lid on redenomination risk and to leave this bond market wide open so the fiscal policymakers can do their part. The hope in Europe is that they will. In the Treasury market, yields just a little bit high. Your 10-year up a single basis point. And that curve, Tom, just a little bit steeper once again.
Absolutely. John mentioned earlier the improvement in Italian yields, lower yield, higher note and bond prices in Italy off of what we've seen. Joining us now, Alberto Gallo of Algebris, as we look towards the ECB press conference. Alberto, just simply, what will you listen for from Madame Lagarde? What is the nuance you will listen for?
Good morning, Tom and John. I think besides the amount of stimulus here the key wording is about how the purchases will be distributed. So whether the ECB will have the flexibility to help countries that are more at risk. In the first paragraph of their announcements, they say the purchases will continue to be conducted in a flexible manner over time across asset classes and among jurisdictions, which suggests that there may be a deviation from the capital key. As we know, the PEPP, the emergency program of the ECB, has been more flexible than the standard QE program, more flexible to go and buy, for example, higher amounts of Italy or Spain, which have been the countries most hit by the virus. So it's a good, sizable positive surprise. But I would say here, the big real news for Europe is the fiscal stimulus that Germany and the EU are doing on the back of this, which means the ECB is no longer pulling all the weight behind stimulus.
Well, let's talk about that, Alberto, because we've discussed it many times on this program. They've announced something, but not everybody has agreed to it. Why are you so hopeful now?
So first of all, there is a German program of 130 billion, which was just announced last night, as you know, and then that's above expectations. There's a lot of investment in new technologies, in research. But of course, the larger program that we are looking at is the 750 billion program for Europe. I do think that this is a game changer for Europe, and I think the probability of this program being passed is very high. I don't know if it's going to be in the first round, but we have seen Germany pushing this finally in agreement with France, and I think the smaller frugal countries will also back the program after a few tweaks. So this, I think, is the real big news that many are probably not discounting yet for Europe. If you look at European markets, they're still a bit unloved compared to other areas of the world.
Alberto, I want to pick up on something John was saying, this sort of faith that we're going to get some sort of agreement on the European Union front for fiscal rescue financing at a time when the ECB is taking a lot of the pressure off. We're seeing this in the U.S. I'm wondering whether the same kind of trend will hold in Europe, that basically the more the ECB does, the less pressure there will be on the continent to get together and actually provide something they have never been able to do before.
It is possible, but in my 20-year time of observing markets and European policymakers, this is the first time where I'm seeing European policymakers ahead of the curve. And you could almost say that European policymakers are slightly more ahead of the curve than policymakers in the UK or the US compared to the economic challenges. And this is a unique situation. So the undervaluation that European assets have is something that we have seen in the last few days. It's correcting. So European assets are catching up. There's a lot of skepticism. I agree. Finland, the Netherlands are still trying to push back. But I think these are minor issues, and these countries will get the help that they need in order to pass the program. And let's remember that of the 750 billion, 500 billion are grants. So we're not talking about a loan to that needs to be repaid, but it's a fiscal grant to Italy and Spain and the weaker countries. So finally, we're closer to fiscal union.
We're closer. I think we all hope we get over the finish line. Alberto, great to catch up with you, sir. Alberto Gala there of Algebris on this market, on Europe, and the global bond market, and the ECB effort, and the European effort as well. In this FX market, the euro rolls over just a little bit, still positive by 0.1%. Euro dollar 112.44. What we've seen over the last couple of days has been this huge cyclical rally and some real European equity market outperformance, and the pendulum has swung. I've always found it very binary here in the United States how European markets are viewed, either run away or pile in, and we have swung the other way, from run away towards pile in, and I just wonder how burnt some people might get, as they have got burnt many times before.
You're absolutely right, John. And, what I would say, folks, is it's been a couple days of this trend. I'll be honest, I haven't done a moving average study, but I'll tell you this, John. Christopher Verona, Strategas Research, is adamant that small caps and the like have relative momentum versus the FANG stocks.
We've had a huge move, Lisa, in the euro, in European equity markets, in the DAX, in the cyclical parts of this equity market in the United States as well. And seemingly everyone has just been squeezed into that over the last 3 days. This morning, we fade just a little bit.
Yeah, I just am frustrated at trying to understand how much people are pricing in a central bank backstop to bankruptcy, because ultimately credit risk does not disappear and companies still have to make money. And this is sort of the big tension underlying credit in particular, John.
Lisa, you've talked about it so many times, and I think it's a really, really good point. At the bottom of the hour, 8:30 Eastern Time, around about 5 minutes away, we will have labour market data here in the United States ahead of the payrolls report tomorrow, and then we will hear from the ECB President, Christine Lagarde. All of that just around the corner, with equity futures down around about 10 points for the S&P 500. We are negative 1/3% after a big rally Monday through Wednesday. From New York, alongside Tom Keene, I'm Jonathan Ferro, together with Lisa Abramowitz on Bloomberg TV and radio. This is Bloomberg Surveillance.
Hey y'all, Jeff Foxworthy here. Now, if you've ever found yourself repeating the same thing over and over for 75 years, you might be Smokey Bear.
Only you can prevent wildfires.
That's why I'm filling in for Smokey to switch things up, because there's a lot more to say. And I should know because my grandfather was a firefighter. And one of the things he taught me is that the people that love the outdoors the most are often the ones accidentally starting wildfires, which means always BYOB. No, bring your own bucket to the campfire. And be extra careful with things like burning yard trimmings. Don't just walk away, or chances are you might be starting a wildfire. So for the love of the outdoors, go to SmokeyBear.com to learn more about wildfire prevention. Brought to you by the U.S. Forest Service, your state forester, and the Ad Council.
Have you wanted to speak a new language, but you thought it'd be too hard or take too much time? Then go to Babbel.com, download the app, and try it for free. In just 15 minutes a day, you'll be on your way to speaking a new language in just a few weeks. And right now, you can try Babbel for free. Babbel starts out teaching you words and phrases by matching them with pictures. You won't believe how easy the interactive program is. Soon the sentences get a little bigger, and before you know it, you're having simulated conversations voiced by native speakers. And because Babbel is crafted by language experts and uses the spaced repetition method, in just 10 to 15 minutes a day, you'll be speaking the language of your choice with real confidence. With Babbel, you can speak a language. Just go to Babbel.com and start your first lesson in the language of your choice for free. Download the Babbel app or go to Babbel.com and try it for free. That's BABBEL.com.
This is a Bloomberg. You know that feeling when you get more than you expected? Like discovering that the box of chocolates has a whole other layer underneath? Or scoring extra poppadoms with your takeaway? Or joining Tesco Mobile and finding out you get the latest phones and 99% UK network coverage. Yeah, that moment feels good, right? Tesco Mobile. Every little helps.
99% 4G population coverage indoors and outdoors across UK.
Hi, I'm Dan from NatWest Manchester branch. We know life's hard right now, but if coronavirus has affected your finances, we're doing our best to make things easier. If you're a personal customer, you can request a 3-month payment break if you're struggling with your mortgage, loan or credit card. Or if you need help with an existing arranged overdraft, you could get £500 interest-free for 3 months. Remember, every one of us is here to support you. There are lots of ways we could help. Search NatWest Coronavirus.
Eligibility and conditions apply to payment breaks. Overdraft up to your agreed limit if lower than £500.
I've used my ample time indoors to hunt down my odd socks. I found one down the sofa, one in the bread bin, and one in a serious relationship with my cat. But there are better ways to spend your time. That's why Money Supermarket is helping you find cheaper insurance, better interest rates, and easier ways to manage your bills. You can find many more small steps towards money car at Money Supermarket.
From New York City, this is Bloomberg Surveillance. For our audience worldwide, we're live on Bloomberg TV and radio alongside Tom Keene. I'm Jonathan Ferro, together with Lisa Abramowitz as we get data in the United States of America. Your labour market data with Bloomberg's Michael McKee.
But John, if you can hear me, we've got 1,877,000 jobless claims, initial jobless claims for last week. That's a decrease of 249,000. So we continue the trend down lower to make things a little bit better, but it's still an extraordinary number. Remember, back a couple months ago, we were looking at 200,000 a month. Continuing claims is what everybody is focused on now, and they come in at 21,487,000. That is an increase from last week, which was 21,052. So it does suggest that we are seeing more people getting continuing claims. And one of the issues last week was that two states, California and Florida, report every other week. Still, it is not as big a jump as people anticipated it might be. So maybe it means that we are leveling out here. The one thing you have to add into all this, pandemic unemployment insurance for people who don't get regular unemployment insurance, gig workers, self-employed, 623,000 last week, which is a major decline from the week before, which was almost 1.3 million. So it looks like maybe those who are filing have filed. We're working our way through the backlogs, and we will get a fairly clean picture of how many people are on continuing unemployment in the next week or so.
Mark McKee, thank you. Tom Keene, there were some hopes that continuing claims would continue to roll over. That hasn't happened this morning.
Yeah. Well, it's a set of data, and of course we've got the massive amount of noise tomorrow as well, John. I would notice within all this some curve steepening, glimmers in the market, but it's what it is. These are tragic statistics as every central banker out there deals with it.
Well, let's head to one central banker now in Frankfurt, Germany. Let's listen in with ECB President Christine Lagarde.
Crucially helped by the sizable support from fiscal and monetary policy. Nonetheless, the projections entail a substantial downward revision to both the level of economic activity and the inflation outlook over the whole projection horizon. Though the baseline is surrounded by an exceptional degree of uncertainty. While headline inflation is suppressed by lower energy prices, price pressures are expected to remain subdued on account of a sharp decline in real GDP and the associated significant increase in economic slack. In line with its mandate, the Governing Council is determined to ensure the necessary degree of monetary accommodation and a smooth transmission of monetary policy across sectors and countries. Accordingly, we decided on a set of monetary policy measures to support the economy during its gradual reopening and to safeguard medium-term price stability. First, the Governing Council decided to increase the envelope for the Pandemic Emergency Purchase Programme, also known as PEP, by 600 billion euros to a total of 1,350 billion euros. In response to the pandemic-related downward revision to inflation over the projection horizon, the PEP expansion will further ease the general monetary policy stance, supporting funding conditions in the real economy, especially for businesses and households. The purchases will continue to be conducted in a flexible manner over time, over asset classes, and among jurisdictions. This allows us to effectively stave off risks to the smooth transmission of monetary policy. Second, we decided to extend the horizon for net purchases under the PEP to at least the end of June 2021. In any case, we will conduct net asset purchases under the PEP until the Governing Council judges that the coronavirus crisis phase is over. Third, the Governing Council decided to reinvest the maturing principal payments from securities purchased under the PEP until at least the end of 2022. In any case, the future roll-off of the PEP portfolio will be managed to avoid interference with the appropriate monetary policy stance. Fourth, net purchases under our asset purchase program will continue at a monthly pace of 20 billion euros, together with the purchases under the additional 120 billion temporary envelope until the end of this year. We continue to expect monthly net asset purchases under the asset purchase program to run for as long as necessary to reinforce the accommodative impact of our policy rates and to end shortly before we start raising the key ECB interest rates. Fifth, we intend to continue reinvesting in full the principal payments from maturing securities purchased under the APP for an extended period of time past the date when we start raising the key ECB interest rates, and in any case, for as long as necessary to maintain favorable liquidity conditions and an ample degree of monetary accommodations. Sixth, we decided to keep the key ECB interest rates unchanged. We expect them to remain at their present or lower levels until we have seen the inflation outlook robustly converge to a level sufficiently close to but below 2% within our projection horizon, and such convergence has been consistently reflected in underlying inflation dynamics. Together with the substantial monetary policy stimulus already in place, today's decisions will support liquidity and funding conditions in the economy, help to sustain the flow of credit to households and firms, and contribute to maintaining favorable financing conditions for all sectors and jurisdictions in order to underpin the recovery of the economy from the coronavirus fallout. At the same time, in the current rapidly evolving economic environment, the Governing Council remains fully committed to doing everything necessary within its mandate to support all citizens of the euro area through this extremely challenging time. This applies first and foremost to our role in ensuring that our monetary policy is transmitted to all parts of the economy and to all jurisdictions in the pursuit of our price stability mandate. The Governing Council, therefore, continues to stand ready to adjust all of its instruments as appropriate to ensure that inflation moves towards its aim in a sustained manner, in line with its commitment to symmetry. And let me now explain our assessment in greater detail, starting with the economic analysis. The latest economic indicators and survey results confirm a sharp contraction of the euro area economy and rapidly deteriorating labour market conditions. The coronavirus pandemic and the necessary containment measures have severely affected both the manufacturing and the service sectors, taking a toll on the productive capacity of the euro area economy and on domestic demand. In the first quarter of 2020, when containment measures were only in place from mid-March in most countries, euro area GDP decreased by 3.8% quarter-on-quarter. Information from surveys, high-frequency indicators, and incoming hard data all point to a further significant contraction of real GDP in the second quarter. Most recent indicators suggest some bottoming out of the downturn in May as part of the economy gradually reopens. Accordingly, euro area activity is expected to rebound in the third quarter as the containment measures are eased further, supported by favorable financing conditions, an expansionary fiscal stance, and a resumption in global activity, although the overall speed and scale of the rebound remains highly uncertain. This assessment is also broadly reflected in the June 2020 Eurosystem staff macroeconomic projections for the euro area. In the baseline scenario of the projections, annual real GDP is expected to fall by 8.7% in 2020 and to rebound by 2021 to 5.2% and by 3.3% in 2022. Compared with the March 2020 ECB staff macroeconomic projections, the outlook for real GDP growth has been revised substantially downwards by 9.5% points in 2020 and has been revised upwards by 3.9 percentage points in 2021 and 1.9 percentage points in 2022. Given the exceptional uncertainty currently surrounding the outlook, the projections also include two alternative scenarios, which we will publish on our website following this press conference. In general, the extent of the contraction and the recovery will depend crucially on the duration and the effectiveness of the containment measures, the success of policies to mitigate the adverse impact on incomes and employment, and the extent to which supply capacity and domestic demand are permanently affected. Overall, the Governing Council sees the balance of risks around the baseline projection to the downside. According to Eurostat's flash estimate, euro area annual HICP inflation decreased to 0.1 in May, down from 0.3 in April, mainly on account of lower energy price inflation. On the basis of current and futures prices for oil, headline inflation is likely to decline somewhat further over the coming months and to remain subdued until the end of the year. Over the medium term, weaker demand will put downward pressure on inflation, which will be only partially offset by upward pressures related to supply constraints. Market-based indicators of longer-term inflation expectations have remained at depressed levels. While survey-based indicators of inflation expectations have declined over the short and medium term, longer-term expectations have been less affected. This assessment is also reflected in the June 2020 Eurosystem staff macroeconomic projections for the euro area, which foresee annual HICP inflation in the baseline scenario at 0.3% in 2020, 0.8% in 2021, and 1.3% in 2022. Compared with the March 2020 ECB staff macroeconomic projections, the outlook for HICP inflation has been revised downwards by 0.8 percentage point in 2020, 0.6 percentage points in 2021, and 0.3 percentage points in 2022. Turning to the monetary analysis, broad money, M3, growth, increased to 8.3% in April 2020 from 7.5% in March. Strong money growth reflects bank credit creation, which is driven to a large extent by the acute liquidity needs in the economy. Moreover, high economic uncertainty is triggering a shift towards money holdings for precautionary reasons. In this environment, the narrow monetary aggregate M1, encompassing the most liquid forms of money, continues to be the main contributor to broad money growth. Developments in loans to the private sector continued to be shaped by the impact of the coronavirus on economic activity. The annual growth rate of loans to non-financial corporations rose further to 6.6% in April 2020, up from 5.5% in March, reflecting firms' need to finance their ongoing expenditures and working capital in the context of rapidly declining revenues. At the same time, the annual growth rate of loans to households decreased to 3% in April from 3.4% in March, amid consumption constraints due to the containment measures, declining confidence, and a deterioration of labour markets. Our policy measures, in particular the very favourable terms for our targeted long-term refinancing operations, should encourage banks to extend loans to all private sector entities. Together with the measures adopted by national governments and European institutions, they support ongoing access to financing, including for those most affected by the ramifications of the coronavirus pandemic. To sum up, a cross-check of the outcome of the economic analysis with the signals coming from the monetary analysis confirm that an ample degree of monetary accommodation is necessary for the robust convergence of inflation to levels that are below but close to 2% over the medium term. Regarding fiscal policies, an ambitious and coordinated fiscal stance remains critical in view of the sharp contraction in the euro area economy. Measures taken should as much as possible be targeted and temporary in nature in response to the pandemic emergency. The three safety nets endorsed by the European Council for workers, businesses and sovereigns, amounting to a package worth 540 billion euros, provide important funding support in this context. At the same time, the Governing Council urges further strong and timely efforts to prepare and support the recovery. We therefore strongly welcome the European Commission's proposal for a recovery plan dedicated to supporting the regions and sectors most severely hit by the pandemic, to strengthening the single market, and to building a lasting and prosperous recovery. We are now ready to take your questions addressed either to myself or to the Vice President.
Christine Lagarde, speaking in Frankfurt, the European Central Bank. The questions begin now. Futures -20, the euro stable at 112.26.
Position of PEP. I'm wondering if you've discussed including junk bonds into PEP, and if not, why not, given that your own stability report highlights the risk of downgrades to stability. The second question is about the German Constitutional Court's ruling, and I wonder if you've discussed this at all. You've, of course, said that you fall under the jurisdiction of the ECJ, but Ms. Schnabel said that the ECB can be constructive in this process. So what precisely does constructive mean in this context? What are you prepared to do? Are you prepared to take a fresh governing council decision as the Constitutional Court is asking you to do? Thank you.
Thank you very much for your two questions.
Okay.
On your first questions, which has to do with whether or not we include junk bonds, as you call them, in our purchase policies. We have defined parameters for our purchases. We want to insulate the way we conduct policy from the effect of the pandemic and avoid self-fulfilling procyclicality. So we will continue to observe the situation and take appropriate and proportionate action. Aside from that, the Governing Council has not discussed this matter. On your second point, which has to do with the Karlsruhe Court decision, I just want to remind you that the ECB is subject to the jurisdiction of the Court of Justice of the European Union. The PSPP has been judged by the Court of Justice of the European Union as, I quote, in line with our policy mandate. We have indeed taken note of the judgment, which is directed at the German government and at the German parliament, and we are confident that a good solution will be found. A good solution that will not compromise the ECB's independence, will not compromise the primacy of the European Union law or the ruling of the European Court of Justice. You follow what we do. The ECB Governing Council regularly assesses the effectiveness, the efficiency, and the cost-benefit of its monetary policy measures. It does so on a regular basis, and as you can imagine, given the package that we have debated and eventually discussed and agreed upon, this has been the case in great depth during the course of our morning session. It is typically...
Good morning, everyone. Tom Keene and Paul Sweeney with you on Bloomberg Radio worldwide and across this nation. We've been listening to Christine Lagarde, always delicate at the European Central Bank, with the beginning of what will be an ample question period. And, of course, this is one of the many stories we're following today. This after we've seen terrific equity market returns, the political challenges that we see in Washington, and, of course, what the ECB is doing today. For those just joining us, jobless claims, a mixed picture. Yes, claims were better, indicating lesser agony in the American job economy, but everything said, a mixed picture as we go to tomorrow's jobs report. Marcus Ashworth joins us now from London. Marcus Ashworth, of course, observing Christine Lagarde and all. Marcus, to me, it's almost a cultural question, and that when the facts change, I change. Is continental Europe, with a Germanic history of economics, all of a sudden getting a massive dose of Anglo-American clarity? Is that what's really going on here?
Oh, well, I must confess that completely escaped me. That is, but I mean, I think what the ECB is doing here is realizing the depth of the problem they've got, and they are getting finally perhaps the more aggressive Anglo-Saxon measures of it. So in that sense, yes, I think you're right. The ECB here has done more than the market expected. That is a good sign. It gives itself a lot of wiggle room. It's clearly very worried about inflation or deflation in this context, and it's given itself a lot of firepower ahead and beyond, and it sets some forward dates, which are just place markers, but they've got to give them at least a year's worth of wiggle room, and she's dodged just now, Madame Lagarde, the whole problem with the German Constitutional Court. Whether she's right in that, we shall see, but for the moment, they're carrying on with the perfect combination of fiscal, hopefully coming from the European Union, definitely coming from Germany on the fiscal, and now further monetary action toward already a big response. They're only a third of the way through their initial 750 billion. They've added another 600 on top of that. It's good.
So, Marcus, going to fiscal stimulus, what can we realistically expect from the European Union?
Well, we can clearly see that Germany is doing all it needs to. I mean, the cut in VAT, the sales tax, is really what all of Europe should do, particularly Italy. And I like to see it in the UK as well. But that aside, that's a very important thing. Germany's getting its act together. As far as the European Union as a whole, look, I think the Frugal 4, which is really only the Frugal 2 now, and possibly only the Frugal 1, is not going to stop this.
I love that. At this household, I could tell you, Paul, at this household, Marcus and Paul, there's only the frugal one. Marcus,
you're talking to him.
Because of time, you're talking to him. Because of time, we got to leave it there. I'm going to steal that line from Mr. Ashworth today, Marcus Ashworth of Bloomberg Opinion, looking at the frugal one of Europe as well. Paul, I'm sorry, Paul, that was very, very funny.
That was, and
we're all getting a little punchy in our quarantine, aren't we?
We are, and it's only Thursday, but Christine Lagarde and the ECB, I think, as Marcus was suggesting, kind of coming out with a fairly aggressive stance here today, doing what they can do. as we've seen the U.S. Fed do what it can do, and coming out and being fairly aggressive fairly early. Now the question is, fiscal stimulus, Tom. I mean, I think that lawmakers really need to gauge what is required, what is needed, and what can actually be done.
And we make light of it, but the divides of any continent and the divides of Europe are just extraordinary. Let me do a data check for you here with the VIX 26.25. The VIX retreats a little bit from the joy to the world of the last few days. Futures negative 18, Dow futures negative 121, even NASDAQ off a slighter percentage point. Today in the yield space, as they call it, 0.18% on the 2-year yield. 30-year yield really backed up a higher yield with a steeper yield curve. It's given that up in the last 20 minutes. I should make note, gold $17.23, up $19. It was below 1,700 earlier. Please stay with us another hour of Bloomberg Surveillance.
This is a message from the government about the next stage of controlling coronavirus with NHS Test and Trace. To protect your friends and family, testing and tracing must become a new way of life. If you have symptoms, you need to get a test immediately. Don't leave home for any other reason. If you test positive, we will contact you to trace people who you might have infected. From now on, if you're told you've been exposed to an infected person, you must self-isolate for 14 days. Play your part and do the right thing so we can safely return to a more normal life. Go to nhs.uk or call 119. Stay alert, control the virus, save lives.
At Lloyds Bank, we know that money is a concern for a lot of people during this time.
You just put pressure on yourself all the time. You just want to do your absolute best.
You automatically then think,
it's my fault.
Yeah, this is because I've not
done X, Y, Z.
Yeah, I've not raised them right.
Whatever's playing on your mind at the moment, Lloyds Bank, in partnership with Mental Health UK, can offer you support and advice. Visit lloydsbank.com/mentalhealth.
You love TuneIn for live breaking news from CNN, MSNBC, Fox, CNBC, and more. But when you can't catch your favorite show as it airs, it might just be a click away as a podcast. Search your favorite news station to explore all the on-demand news shows on TuneIn.
Wanna bet football can make you feel nostalgic?
Playing days are over, so...
On the podcast, NFL Alumni Lounge, Charlie Booth sits down with retired NFL legends to talk about their careers, life after football, and everything in between.
This is Darren Waller. Good to have you.
Yes, sir. It's good to be here.
Dana White, welcome to the Alumni Lounge.
Thanks for having me, brother.
Big member of our NFL alumni family, the CEO of the XFL, Mr. Oliver Luck.
Charlie, good to see you. Thanks for having me.
We're here with the president, Mr. Eric Price. Good to see you.
Search NFL Alumni Lounge on TuneIn to listen.
Want to relive the glory of college football?
Balls over a man, into the end zone.
Come explore TuneIn's classic game replay collection to hear ESPN's complete coverage of the 2019 New Year's 6 bowl games. Don't miss your chance to re-experience the Rose Bowl, the 2020 National Championship, featuring Clemson and LSU.
There are going to be 2 champions on the field tomorrow night. There's going to be 1 team hold up the trophy.
Search classic game replays to listen for free.
With the NHL season temporarily on ice, now is a good time to catch up on past games.
Bergeron, he scores!
With game replay on TuneIn, you can listen to every power play, slap shot, and goal of the 2019-2020 season so far.
Suter to Cunningham to Fiala, he scores!
For a limited time, it's free for hockey fans everywhere. Search classic game replays to start listening.
With millions of podcasts dropping new episodes all the time, how do you keep up with all your favorites? TuneIn makes it easy. Simply head to the home screen and find your new episode section to see the latest additions.
Hey, y'all, we're taking the Marty Party to a whole new level with the Marty Smith's America podcast with Gerald McCoy.
I truly believe that Carolina made a mistake letting Cam go. This is not a personal shot at Teddy Bridgewater. This could have been Andy Dalton. This could have been whoever they brought in. Cam has so much left. Somebody's really getting a great one, man. And I don't think people really understand what they're getting.
Search Marty Smith America to listen.
losers in a trade war.
You benefit if you're just further away from China.
So that you can too.
What are the ramifications if she crumbles or doesn't crumble?
Bloomberg Radio, the Bloomberg Business, Radio.com, and iHeartRadio apps, and BloombergRadio.com. Bloomberg, the world is listening. From the financial capital of the world, 24 hours a day at Bloomberg.com, on the Bloomberg Business app, and on Quick Take by Bloomberg. This is Bloomberg Radio. This is Bloomberg Surveillance Economics.
Certainly, we've got to put a floor under the economic carnage.
Markets didn't believe the coronavirus would take down the world economy.
Finance.
The sellers are not necessarily finished, but quite exhausted.
Investment.
That's the reality that we have to settle ourselves to. This is the start of a depression.
We're going to have a bounce back when everything is open. The question is, what is the shape of the economy from there?
Bloomberg Surveillance with Tom Keene and Paul Sweeney on Bloomberg Radio.
Good morning, everyone. Paul Sweeney and Tom Keene, Bloomberg Surveillance. Thank you for being with us on economics, finance, investment, the politics of this nation, and, of course, always we cover the many interdependencies, the international relations of America. We welcome all of you in Washington, in Boston. Good morning. Perfect. First summer morning, I would say. Bloomberg 1130 in New York. Paul, I think the high today, 87. I believe we're on the edge of summer.
I think we are, Tom. We just went right from, that early spring right into summer, which it can't come soon enough from my perspective.
I got an email moments ago from an acclaimed store near Lexington Avenue in New York. They are the best at what they do. I'll keep it private, but they are opening, Paul, on Monday. I got an email from them, and they're opening. The president just came back to me. Maybe I'll give them a plug here in a bit. Right now, I've got some other news to tell you. And we do this with futures a little bit off the ebb that we've seen. This morning, the first chart I looked at, folks, was the S&P 500, 7% down from that Valentine's Day peak. So that's a big recovery. Bloomberg Surveillance is always brought to you by our good friends Cohn Resnick Advisory Assurance Tax. Cohn Resnick can help your business mitigate disruption and mobilize for the future. Visit their Coronavirus Resource Center today, CohnResnick.com/COVID-19. And we thank Cohn Resnick for their support as well. One of the things we really know, really a clarion call, has been David Wilson with all of his equity understanding. David Wilson remembers when you traded a share of stock for 60 cents a share, $1 a share, $1.50 a share. And now, David, they're all giving it away for free, which means I guess we're going to merge into one big company, right?
It's sure looking that way, Tom. But before I get to that, we just saw a headline a moment ago. eBay raising its revenue and earnings forecast for the second quarter. They talked about, among other things, how they added 6 million buyers in April and May. Everyone's staying home because of the coronavirus, going online, doing their shopping at eBay, and those shares are up 5.5% in early trading. So eBay, one of those companies benefiting from the coronavirus pandemic. And now we turn to the brokerage business. TD Ameritrade up 7.5% in early trading. U.S. antitrust regulators cleared Charles Schwab's proposed $23 billion purchase of the discount broker. That's according to a person familiar with the matter. And that approval was first reported by CNBC. Schwab shares, by the way, up 4.5%. You have another deal, though, that isn't going so well. Tiffany's down 1.5%. France's LVMH ruled out open market purchases of the jewelry retailer's shares as part of a $16 billion takeover. Now, Tiffany's close yesterday was 15% lower than LVMH's offer, which the French company's board reviewed yesterday. Now we turn to travel, and you're seeing a whole lot of companies higher in early trading. American Airlines, notable in that regard, up 8% in early trading. The carrier plans to increase the number of flights in July by 74% from June's schedule in response to growing demand. American's set to operate next month at 40% of its 2019 capacity, up from this month's 30%. David? You look across other airline stocks, you see Delta up 4.5%, Southwest up 4%, United up 5%. Casino stocks are rising for a second day. They were allowed to reopen gambling centers in Las Vegas as of midnight local time today. Las Vegas Sands up 2.5%. MGM Resorts up 5%. Wynn Resorts up 2.5%. Now, one travel stock that's notably absent from these gains, Royal Caribbean down 3.5%. The cruise line owner is selling $1 billion of bonds tied to 7 ships, along with another $1 billion of convertible debt. These sales are being made privately. Gap's down 3.5%. The apparel retailer was sued by mall owner Simon Property Group for failing to pay $65.9 million in rent from March through June. Now, Gap and other retailers had to close stores because of the coronavirus pandemic, and that's why they aren't paying in large measure anyway. On the earnings front, you've got J.M. Smucker down 4%. The food maker said it expects fiscal year earnings of no more than $8.30 a share. The forecast is below the average analyst estimate in Bloomberg survey. Smucker's also predicting a sales decline of as much as 2%. Navistar International, on the other hand, up 6%. The truck and engine maker reported a narrower loss and higher revenue for the fiscal second quarter than analysts expected. And on the IPO front, if you will, Warner Music Group up 2%. The music company's higher for a second day after a $1.9 billion initial public offering by its largest stockholder, Russian billionaire Len Blavatnik, and the company's management. Warner Music rose yesterday by 20.5%. Wow. Today, we get Zoom Info Technology. It's a provider of sales prospect data, did a $935 million IPO. And let's be clear here.
Another
Zoom Info's ticker is ZI. Don't confuse it with that video conferencing company, Zoom Video Communications, whose ticker is ZM.
I put in 10,000 share order yesterday. I used the wrong symbol.
The wrong symbol. Bloomberg Stocks editor Dave Wilson, thank you so much for bringing us update and confusing us once again with another Zoom in the marketplace. Exactly. Well, Tom, we just heard Christine Lagarde, come out with another forceful move by the ECB, stepping up their programs here to stimulate the economy, keep liquidity in the marketplace, much in line with what we're seeing from the U.S. Federal Reserve. Do you get a sense of what that means for some of the currencies over there in Europe? We welcome our good friend Mark Chandler, Bannockburn, Chief Market Strategist and Managing Partner. I'm looking at the euro here, up just slightly. Mark, thanks so much for joining us here. What did you take away from Madame Lagarde's comments this morning?
Yeah, thanks, Paul. Yeah, it's really amazing that the euro has been up 6 days in a row coming into today. This is the longest advance the euro's had in 5 or 6 years. And Lagarde's comments were greeted by more euro buying. The euro was pulling back a bit before the meeting. It's rallied, I think, because the ECB is saying, in essence, they're still going to do whatever it takes to solidify what could be the bottom, could be the recovery going forward. So what they did is they really expanded that bond buying program from 750 billion euros that was going to end at the end of this year to they added 600 billion to that and extended it to at least the middle of next year. And so this was greeted not only by a rally, a bounce in the euro, but also a big rally in European bonds, especially in the periphery like Italy and Greece.
Does it mean a seismic shift in dollar pairs of DXY or a more global Bloomberg DXY or broad trade-weighted dollar? Are we indicating here a momentous change, Mark?
Yeah, Tom, last time we spoke, I was still thinking that the risk-on rally was going to run out of steam, whether it was stocks, or I think we talked about the Australian dollar at the time. And what concerns me, I guess, is that I had come around to this. I think that how can these risk-on assets continue to rally in the face of bad news? And it's occurring to me that it's a question of, I think many of us have in our mind a fair value model, what the stock market should be based on the economy or earnings, or where the dollar should be based on these fundamental factors. But there's another model we should have, and that's liquidity driven. And what the ECB did today was they indicated they're going to continue to provide large amounts of liquidity. And they're actually going to be expanding their balance sheet faster.
So, Mark, how do you feel about this? Yeah, Mark, how do you feel about this? I mean, what's your comfort level or discomfort level with kind of where we are in some of these riskier assets, whether it's the stock market or some of these currencies, as we think about central banks around the world just flooding the market with liquidity?
Yeah, so, I mean, it's one of those things where it's like riding a wild tiger. You're not sure whether it's better to be on its back or off of it. And it does scare me. I've got enough scar tissue from past sell-offs in stock markets to respect, have some kind of idea about value. But this is really momentum and liquidity driven. And until there's some reason to think that the central banks are not going to be providing this liquidity, I think that the ride can go on.
That's it, Tom. I think that's the story that we've heard. So, Mark, I mean, you think about the euro here. Where's your sense of where this can go? You mentioned we've had a nice little rally here. What's your sense of kind of the underlying fundamental strength of the euro?
Yeah, so I think that the euro is partly benefiting from this liquidity and people moving back in. In the last, maybe 2 weeks, the European stocks have been outperforming U.S. stocks. And the European bonds, of course, outperforming U.S. bonds. And so where could the euro go? I think there's a big short out there against the euro. People who have thought that maybe the Eurozone is going to collapse, but I think that money's coming back. Yeah, and so maybe, what's the level, 115, something like that? I still think that there still is underlying strength in the U.S. And the idea, just today we saw yesterday Germany agreed to like a 4% stimulus package on top of what they've also already done. Now, that's not all like what the Japanese would call is clear water. But I think that when we talk about the bottom of the markets and bottom of the economies, everybody's talking about these different letters. I'm sort of more struck by the K, where those who have to good preconditions, fiscal space like Germany, or the commitment like the U.S., the CBO says our deficit will be 18% this year. Right. We'll come out ahead, and this perhaps sets a stage for a new level of divergence where some countries will do very well and some won't do so good.
Yeah. Mark Chandler, thank you so much with Bannockburn. We greatly appreciate it this morning. And now with our news in Washington, here's Amy Morris.
All right, thank you, Tom. Charges against former Minneapolis police officer Derek Chauvin were upgraded to second-degree murder in the death of George Floyd, while 3 other former officers were charged with aiding and abetting the crime. The criminal complaint concludes that Chauvin had his knee on Mr. Floyd's neck for 8 minutes, 46 seconds in total. 3 Georgia men charged with murder in the fatal shooting of Ahmaud Arbery are due in court. A judge scheduled that hearing for today to determine whether authorities have sufficient evidence to send that case to trial. Arbery was killed in February while running through a neighborhood. A white man and his son armed themselves, chased him down, and then shot him while their friend recorded it on his cell phone. Former President Barack Obama is taking on an increasingly public role as the U.S. confronts historic crises, the pandemic and civil unrest, which will likely reshape the November election. During a virtual town hall, the former president had a message for protesters.
You've communicated a sense of urgency that is as powerful and as transformative as anything that I've seen in recent years.
And New Orleans Saints quarterback Drew Brees is apologizing for his comments on disrespecting the flag, saying that he, quote, completely missed the mark on current issues in the United States. He had told Yahoo Finance that he would never agree with anyone disrespecting the flag. That was a reference to Colin Kaepernick's kneeling during the national anthem. He later told ESPN that he stands with his teammates fighting for racial equality and justice. Live from the Bloomberg Interactive Broker Studio, this is Global News 24 hours a day, on air and on Quick Take by Bloomberg, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Amy Morris. This is Bloomberg. Tom and Paul.
Amy Morris, thank you so much. We appreciate that checkup. Looking at the markets here, Tom, just a little bit of pause in the market, Tom. I'm not going to make too much of this here, but just a little bit of a pullback, despite the aggressive moves by Christine Lagarde and the ECB this morning.
I'm staying strong. I'm still triple leveraged all cash. Today
you're just looking at your 0.0003% return.
I looked at the first thing I looked at today was the moonshot off the March lows. It's incredible. I mean, and we had a guest earlier today, Greg Bottle, BNP Paribas. He says, look, this is a bear market run. This is not a bull. He was heated. He missed no words about it. There's a lot of different opinions out there right now.
There really is. Just kind of seeing this, almost a 40% move off of the bottom here. And, it's certainly, as we see from the ECB today, just central banks really stepping in to pump liquidity into the marketplace. When you talk about the U.S. Fed in the marketplace, again, the best discussion I heard was it was a backstop to the market, a backstop to risk, and that appears to be what's happening. We'll have more. This is Bloomberg.
Imagine being denied an apartment because of your religion, or your race, or because you have children, or a disability.
It's so wrong.
Yes, but who has the power to stop this?
You do. Each of us has the power. The law is on your side. It's It's illegal for landlords to discriminate because of race, color, religion, sex, national origin, disability, or familial status. If you suspect that you have experienced housing discrimination, file a complaint with HUD immediately so we can investigate it. Fair housing is your right.
Use it.
To learn more, visit HUD.gov/fairhousing. That's HUD.gov/fairhousing. Or call 1-800-669-9777. 1-800-669-9777. A public service message from HUD in partnership with the National Fair Housing Alliance.
Why do hedge funds and other alternative managers rely on Pershing for a highly personalized experience? Mark Alderati, a managing director at BNY Mellon's Pershing and head of Prime Services, explains.
In today's fast-paced environment, where the only constants are change and volatility, you need a prime broker who's both steady and agile, focused on supporting your needs so that you can focus on growing your business and producing results. Exceptional client service and advocating for our clients is at the core of what we do. Our award-winning high-touch team is just one of the benefits of working with BNY Mellon. We help alternative investment managers create great experiences for their clients. Whether it's customized financing, securities lending solutions, platform access, or outsourced trading, BNY Mellon's Pershing is a prime broker who's committed to this business and dedicated to meeting your evolving demands.
To learn more about the unique and industry-leading solutions for hedge funds and other alternative managers, visit Pershing.com. Pershing LLC. Member FINRA, NYSE, SIPC.
Influential.
You know that feeling when you get more than you expected? Like discovering that the box of chocolates has a whole other layer underneath? Or scoring extra poppadoms with your takeaway? Or joining Tesco Mobile and finding out you get the latest phones and 99% UK network coverage? Yeah, that moment feels good, right? Tesco Mobile. Every little helps.
99% 4G population coverage indoors and outdoors across UK.
People's Postcode Lottery's 30k a day is back. £30,000 will be won every single day by players in the July draws. That's £30,000 for every player in the winning postcode. Visit postcodelottery.co.uk/radio before midnight on the 18th of June to play in the July draws. PPL managed lotteries on behalf of good causes. 16 plus conditions apply. Play responsibly.
Where will 2020 take you? Somewhere where people care about each other, about our planet, about creating a better world for everyone, and becoming the best versions of yourselves. Join a community of like-minded individuals at the University of Winchester. Make sure to accept your offer by the UCAS deadline and visit our website to find out more. See the bigger picture. Be the difference. Go to winchester.ac.uk.
Breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and on Quick Take by Bloomberg. This is a Bloomberg Business Flash.
And I'm Karen Moscow. S&P futures down about 12 points this morning. Dow futures down 58. NASDAQ futures down 7. 10-year Treasury down 11.30 seconds. Yield 0.78%. They yield on the 2-year 0.19%. And NYMEX crude oil is down 1%, down 40 cents at $36.88 a barrel. That's a Bloomberg Business Flash. Tom and Paul.
Karen Moscow, thank you so much. And now, without question, our interview of the day. Admiral James Stavridis, of course, an author of any number of books, including the Leader's Bookshelf, and former service to this nation, among other things, as Supreme NATO Commander. James Stavridis, the 48 hours here have been extraordinary. I wrote a script about Lieutenant Colonel Esper, about General Miley, about General Mattis, and I wrote a script about Admiral Mullen. They're all on board. Do the soldiers and the sailors of the military, do they have their back?
Yes, I think so. As I look out across the force today, Tom, we have 1.2 million active duty military, and they didn't sign up to dominate protesters, peaceful protesters in a battle space. We've got plenty of law enforcement officers, plenty of National Guard troops who can do the kind of attention to prevent looting that is so important. But I think the military recognizes its duties to the Constitution of the United States.
They were ordered to stand on the steps of the Lincoln Memorial as they did. What were your thoughts when Martha Raddatz of ABC showed that image of our military, of whichever flavor, lined up like Game of Thrones on the steps of the Lincoln Memorial?
You know, Tom, I don't think it's important what I think. Let's think about what Abraham Lincoln must have thought about that as he was looking down from that great republic in the sky. I think he would have been stunned to think that we'd hit this point over the exact issues that he had worked so hard to keep our country together, to overcome the kind of racism at its absolute peak and slavery. He must have felt as though he had that occur through the Civil War, and all that work must have felt so undone to him to see armed troops standing there. I find it saddening to think what Abraham Lincoln would think of that moment.
Admiral, just if you could, just give us a sense of how you think maybe the most senior military commanders in this country, how do they feel like they need to react to President Trump? I'll think about the Joint Chiefs when he issues an edict about, maybe deploying troops to the Lincoln Memorial. I mean, is it simply, he's my commander-in-chief and therefore I fulfill the order?
First, any senior military officer is going to begin by saying, here's my advice on this situation, Secretary of Defense and Mr. President. We will never know, because of the professionalism of our senior military, what the exact advice they gave the president. But I would guess that they advised him not to do it, that it would be the wrong thing, the wrong signal, the wrong step forward. Once the president then overrides, then you have a very tough decision to make as a senior military leader. If it is a lawful order, and it is a lawful order, it's not a smart order, but it's a lawful order, then you can either execute it or you have to resign. I think what we've seen in the last 24 hours, both from Secretary Esper and from General Milley, is them taking a step back and effectively saying to the president through their public pronouncements, hey, we don't agree with this, and now we're going to see what unfolds in the next 24 to 48 hours.
Joining us on Bloomberg Radio across this nation, James Stavridis, former admiral with the United States Navy and, of course, Supreme Commander, NATO. James Stavridis, the lieutenant colonel, earned a Bronze Star moving to the left on the road to Baghdad. He's in a difficult position right now. What does the Secretary of Defense do? Is it constructive to resign, or does he carry forward waiting to be terminated, as is the speculation overnight?
Certainly these are intensely personal decisions, and I'm sure, for example, Secretary Mattis and White House Chief of Staff Kelly must have wrestled with these kind of thoughts after Charlottesville, when I think there were a lot of storm clouds gathering and red flags flying about where this was all going. So I am hopeful that Secretary Esper will convince the president, as is his job, to do the right thing here, which is to let law enforcement, National Guard take care of these kind of missions. We do not want to turn this into active duty military rolling tanks down Pennsylvania Avenue or flying helicopters. We actually saw this, flying combat helicopters low over protesters. Hey, that's the stuff we do in Afghanistan and Iraq in a war. We don't do that in the United States of America.
Admiral, I read some history today, which you are expert on, and folks, I can't say enough about the Leader's Bookshelf by James Stavridis. It's really an important book. Douglas MacArthur didn't have a helicopter when he and a young Eisenhower and Major Patton had to take on the bonus boys of World War I, starving in 1932 in the Depression. MacArthur had a challenging career after that within his acclaim and his bravery and leadership as well. Is that the kind of person the president wants? Is he really in search of the Douglas MacArthur that my grandfather worshipped?
I think all presidents reach for active, engaged, forceful leaders. And sometimes the leader you inherit in a situation, let's say Lincoln, we were talking about him earlier, gets McClellan, General McClellan, who's a pretty boy soldier, but he has to go through a lot of generals till he gets to General Grant.
Yeah.
And so what we see, I think, is the president reaching for active, engaged generals, but what he really wants is a general who will stand up to him and tell him what he cannot do, what he should not do. I think that's the general that President Trump needs desperately in this moment.
James Trevitas, thank you so much, with allusions there, of course, to Mr. Grant as well, General Grant as well. Admiral Trevitas, we look forward to the next essays from you on this historic moment in Washington. Paul?
Just extraordinary. I love speaking to the Admiral because he just I feel like he's just got a sense of really a central, reasoned, rational look at some of these big issues that our military leaders have to deal with today. And I think he just gives us, just a great sense of kind of some of the strategy behind a lot of these people. And again, he obviously has some concerns about how some of the active military is being used these days.
It'll be interesting to see, Paul. Kevin Surley reporting on this. And, of course, look for Kevin on the Bloomberg Radio tonight. Our chief Washington correspondent making very clear that the president has been uncommonly quiet over the last 18 hours or so. And Kevin alluded to the idea that we would look for an eventful Thursday from the president. We will see on that as well. The news flow is absolutely extraordinary. There's no other way to put it. Futures negative 18 have improved to negative 10. Dow futures negative 52. Sweeney nailed this, a market that will never go down. 26.05 on the VIX. Please stay with us across this nation. This is Bloomberg.
Have you wanted to speak a new language, but you thought it'd be too hard or take too much time? Then go to Babbel.com, download the app, and try it for free. In just 15 minutes a day, you'll be on your way to speaking a new language in just a few weeks. And right now, you can try Babbel for free. Babbel starts out teaching you words and phrases by matching them with pictures. You won't believe how easy the interactive program is. Soon the sentences get a little bigger, and before you know it, you're having simulated conversations voiced by native speakers. And because Babbel is crafted by language experts and uses the spaced repetition method, in just 10 to 15 minutes a day, you'll be speaking the language of your choice with real confidence. With Babbel, you can speak a language. Just go to Babbel.com and start your first lesson in the language of your choice for free. Download the Babbel app or go to Babbel.com and try it for free. That's Babbel.com.
Debbie Hart is president of BioNJ, which represents the interests of more than 400 New Jersey-based biotech companies. She's also a strong voice in the biotech sector, supporting research universities like New Jersey Institute of Technology. She sees NJIT as a valuable partner in attracting venture capital and biotech startups to the Garden State.
So the number one reason that companies come here to New Jersey for the biotech industry is for our talent. We estimate that there were about 30 biotech companies in the early 90s in New Jersey, about 80 in 1998. Today there are more than 400. And that growth continues, and it's come from every possible angle. Other countries, other states, they've spun out of our academic institutions as well as our biotech and our pharma companies, and we expect that growth to continue long into the future. And NJIT is a pipeline for talent, for companies, for entrepreneurs to do that important work.
NJIT, New Jersey Institute of Technology. Learn more at njit.edu.
This is a Bloomberg Money Minute.
If you can build that flat-pack wardrobe without looking at the instructions, you've still got it. If you can manage 5 keepy uppies on your first go, you've without question still got it. If you can toss a pancake to the ceiling and not let it hit the floor, surely you've still got it. And if you can just about fit into those jeans you bought 5 years ago, you've definitely still got it. Brute, still got it.
The IBM Flash storage solution can be broken down into 3 S's. Speed, retrieve data fast. Scalability, grow your storage as your business grows. Simplicity, easily migrate and integrate with existing systems. Oh, and there's a 4th. It's surprisingly affordable, with a recommended monthly price of £200 for 26 terabytes. Order by the 30th of June and pay nothing for 90 days. Visit ibm.biz/flash offer now.
This is a message from the government about the next stage of controlling coronavirus with NHS Test and Trace. To protect your friends and family, Testing and tracing must become a new way of life. If you have symptoms, you need to get a test immediately. Don't leave home for any other reason. If you test positive, we will contact you to trace people who you might have infected. From now on, if you're told you've been exposed to an infected person, you must self-isolate for 14 days. Play your part and do the right thing so we can safely return to a more normal life. Go to nhs.uk or call 119. Stay alert. Control the virus. Save lives.
Broadcasting live from the Bloomberg Interactive Broker Studio in New York. Bloomberg 1130 to Washington, D.C. Bloomberg 99.1 to Boston. Bloomberg 106.1 to San Francisco. Bloomberg 960 to the country. Sirius XM Channel 119 and around the globe. The Bloomberg Business app and BloombergRadio.com. This is Bloomberg Surveillance.
Good morning, I'm Karen Moscow, along with Tom Keene and Paul Sweeney, and the opening bell brought to you by SEI. Crisis bring out the best in people, character, community, partnership, together as one. SEI, go to SEIC.com/IMS. Stocks are lower at the open. The S&P 500 down 0.5% or 14 points at 3108. The Dow Jones Industrial Average down 0.33%, down 86 points to 26,184. And the Nasdaq's down 0.33% or 30 points to 9652. 10-year Treasury down 11/32, yield 0.78%. Yield on the 2-year 0.19%. NYMEX crude oil is down 1.5% or 57 cents at $36.71 a barrel. COMEX gold up 0.9% or $16 at $17.20.90 an ounce. The euro 1.1257 against the dollar. The yen 108.73. Tom and Paul.
Karen, thank you so much. One of the great joys of Bloomberg Surveillance, and something we've done from the get-go, is talk to all sorts of different people within certain categories of the street. And Paul, as you well know, when you look at the resume of our next guest, it is an extraordinary path.
It's been around.
This is a guy, and the phrase, folks, is the bid walks away. Let me translate that for you. Something is at 10, and the ask for it, people enthused to buy it, it's at 10 1/4. So you go in and you buy it at 10 1/4, and the bid below it at 10 walks away, if you're lucky, to 9 7/8. But for Vince Signorella, too often it went to 9 5/8. Did I explain it? Did I explain it right, Vince?
Yeah, I miss 8 1/4.
Yeah. That was profit margin back in the day.
Trading in decimals and translating to that really hurts.
Yeah, I like to bust Arthur Levitt's chops about that. I still talk about Anaconda Copper 78 3/4. Vince, one of your charms, besides all this bow tie academics, is you've got phenomenal trading experience, which is the awareness of what the market is. I know you've never seen a market like this, but what's the awareness of the people out there creating those bids and asks? Butch Cassidy, who are those guys?
I think, unfortunately, it's not guys, but Python programmers trading on machines for a substantial part of this. And you can see it in the price action. What's driving this market is clearly monetary policy. We no longer really, we were talking about this with a trader this morning. So the market pulled back on the headlines of the China-U.S. trade. I said, yeah, the market does pull back a little. But then as soon as you get good news, it rallies a lot. So the programming in the space, the breadth of the market, the will of the market, is to want to trade good news at a more aggressive pace than pull back on bad news. And that's the sentiment of the market right now. Good, bad, or indifferent, and a lot of people are missing it. That's the interesting part.
So, Vince, we've seen even just this morning with Madame Lagarde, the ECB, we're seeing around the world central banks kind of flooding the market with liquidity here, kind of backstopping all risk assets. Is there a sense when you talk to folks out on the street, on the trading desk, of when this might end, or what it might look like as this, if it were to end?
Well, this is the feel. The feel is it's not going to end for a while because it's not going to end until the economies really come back. And, you heard Powell say, we're in this for the long haul. They will let things run hot when that time comes. But there's plenty of time for that. I think what it's going to look like at the end, unfortunately, is the central banks are going to get what they wished for. When you flood the market with this much liquidity, when you flood the market with this much fiscal stimulus, clearly when you start to take that back, you are going to create some inflation. We're already starting to see it in food prices. Now, the Fed doesn't measure that, but the average person, you and I, are most certainly feeling a pinch here and there. There are no more. The only people that are discounting are retailers, and nobody really wants any of that stuff. The stuff we need and want, the prices are actually going up in that space.
So it's interesting, Vince. I mean, I think a lot of investors are out there and they're just kind of looking at the market here. So is there a sense that as long as the Fed and other central banks are out there, that I'm okay being in this market? Is that simply the trade? Because it used to be, I guess it just comes back to what I learned, I think, my first day on Wall Street, which is don't fight the Fed. Is that kind of where we are?
Yeah, absolutely. Don't fight the Fed. I stepped in front of a central bank once. It was the Bank of Japan, and it didn't end well, I promise.
Okay.
What I will give you is this. I looked at something roughly about a month ago. There's a very nice inverse correlation. And if you want to pop this up on a chart, you can look at it between the SPX and the Bloomberg Dollar Index. And the dollar is continuing to trade under pressure, and this is traders leaving the haven trade. You could also see it in dollar yen as white dollar yen is going higher. And as long as traders keep leaving that haven trade and the dollar is coming off, I think you'll see equities rise. And we're seeing it again this morning. We're seeing a fade in the dollar once again. It's not, basically just went negative by a smidge. And we're seeing the stocks trading better.
I just learned something again, Tom. Every time I talk to Vince, I learn something new.
He's a font of wisdom, particularly when he shows up with cigars. Vince, when I look at this market and you give me all this enthusiasm, I'm like, who's in the market? And I'm getting no love out there, no enthusiasm by the public, shell-shocked by 20% unemployment, shell-shocked by all that's going on our streets and in Washington. Is it your sense that retail's actually participating in this melt-up from middle of March?
Totally. There's like 800,000 new retail accounts that have opened since this.
I've observed that, yes. Why is that? Why?
I'll tell you something. A person I know. He was furloughed. Lovely gentleman. I believe his job was the manager of a hardware store. Does not really have much financial acumen and still trading stocks. His wife, my wife, are good friends, and she says he's sitting on the couch trading stocks because he's bored.
We're gonna rip up the script here. This is too important. Unfortunately, we got a number of minutes here. Let's talk about this right now. Okay, you're telling me, and full disclosure, folks, I've seen it anecdotally. The online brokerage firms, including David Wilson reporting on TD Ameritrade and Charles Schwab 40 minutes ago, they're overwhelmed, right? Mm-hmm. You have people with X amount of money. You say bored. You say quote unquote trading stocks. What's the outcome of that based on your 30 plus years of enjoying losing money as a pro?
Well, I can tell you this. First of all, it took me 21 years to have my best year. So I would tell this to the retail brokers out there. This is a very learned experience. It doesn't happen overnight. My problem with what you're saying and what you're alluding to is a professional trader a good professional trader is a good disciplined trader. They have levels where they get in, they have levels where they get out. A newbie, if you will, has a tendency to see dips and believe the story all the time of buying the dips.
Right.
If you get a tsunami of bad news, and that dip doesn't become just a dip, but rather a serious, maybe 10% reach race, it gets ugly after that.
Yeah, there's a guy named Van Tharp, folks, who wrote a book, and the book is very, very good, but two of the chapters are absolutely extraordinary on position sizing, which is what I call, when I speak on this, the how muchedness that you put in. I would suggest, Mr. Signorello, a wise one, that the single biggest mistake people make sitting on their couch bored listening to Bloomberg surveillance is they put too much or too little in a given trade. Discuss that.
Well, in terms of the too much side of it, is you get married to an individual stock. And we've seen big run-ups in stocks such as Amazon, Facebook, Walmart, and such after this pandemic started. And what happens is people get in, they get in some more, they get in some more, they get in some more, and they don't ever feel like they're buying at the top. And what you're doing really is disimproving your average. So if you started at 50 and now you're buying at 80, your average is, you have a much, much bigger position, but your average is actually a lot higher. So your tolerance for loss should become less. And what that means is once you get back down to where your quote-unquote break-even is, you're not inclined to get out as a non-professional. You're inclined to do more. And then if it happens to keep dipping lower, that's when the trade starts to turn ugly. And as far as too small is concerned, to be too small in a trade, you don't really take it seriously. So when it starts to move against you, you don't panic so quickly because the loss doesn't feel so much. What retail investors need to know is the easiest way to take a loss is when it's really fast, like a market drops a quick 10, 20%. You're inclined to get out of a trade. But when it's a little drip, 1% a day, 1% a day, 1% a day, unfortunately, the feeling is amazing. You don't really feel it until it's too late.
And Paul, of course, I've never experienced that.
No, of course. So, Vince, we're seeing the dollar trade off. You mentioned that earlier. What is the long trade in currencies? When you talk to currency traders, what do they really like right here?
They like dollar yen, and that's why I think if you like that concept of getting out of the haven trade and getting into the risk trade, the levels that they're looking at dollar yen, they see any part of upwards of a break of their sellers at about 109.30-35. So the retail yen traders, that's probably where you want to take a break. But a break of above 109.50. They see this thing going another big figure and a half, so up to maybe like 111.
Right. Vince Cigarella, don't be a stranger. I didn't learn a thing. He is at Bloomberg Squawk Box, incredibly wise on the trading, on the nitty-gritty of the markets as well. Always hugely valuable. And now with our news in Washington, here's Amy Morris.
All right, thank you, Tom. The memorial service is set for today for George Floyd, the start of a series of events to mourn the man who died while in police custody. Services will take place in 3 cities over 6 days, with a chance for people to pay their respects where Floyd was born, grew up, and died. Charges against former Minneapolis police officer Derek Chauvin were upgraded to second-degree murder in Floyd's death. 3 other officers are now charged with aiding and abetting. Minnesota State Attorney General Keith Ellison tells ABC's Good Morning America the other 3 officers are culpable.
That they helped. And if you can you can look at the tape and see who's sitting where and see the assistance that was given, meaningful and important assistance to what Chauvin was doing.
All 4 officers are in custody. New Orleans Saints quarterback Drew Brees is apologizing for his comments on disrespecting the flag, saying he, quote, completely missed the mark on current issues in the United States. He tells ESPN that he stands with his teammates fighting for racial equality and justice. Brees had said yesterday that he would never agree with anyone disrespecting the flag. That was in reference to Colin Kaepernick's kneeling during the national anthem. The president's doctor says he is healthy but overweight. President Trump's latest physical finds that he is obese as measured by his body mass index. White House physician Sean Conley says the president completed that physical in April. Live from the Bloomberg Interactive Broker Studios, this is Global News 24 hours a day, on air and on Quick Take by Bloomberg, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Amy Morris. This is Bloomberg. Tom and Paul.
Amy, thank you so much. Lots going on in the markets here. Nicely open. The Dow -70, SPX down 10 points as well. NASDAQ 100 green on the screen, up 6 points. Just unbelievable what you see with a NASDAQ day after day. The VIX 25.46 has come in 0.20 points. That's important. That's been a reversal off the gloom that we saw earlier this morning. In the yield space, as they say, 2-year yield higher. That's important. Again, really indicating the new risk on feel, 0.19%. The 30-year bond out to 1.58%. 2-10 spread, the vanilla spread, out to 60 basis points. That's a real benchmark, 6-0. Difference in yield between the 2-year and the 10-year. widens out. Gold up $13 worldwide. This is Bloomberg.
This is a Bloomberg Pursuits look at luxury. One of the world's great sandwiches, the tuna melt, is making a comeback. There's been an increase of over 30% in mentions of tuna melts across Reddit's 18.7 million member food community, and a 60% increase in mentions of canned tuna. Thank coronavirus shopping for that. The humble concoction of canned tuna, mayonnaise, and sliced cheese may be just the comfort food we want right now. Sandwich or not, it seems gym junkies are hankering for a fix. Almost a month after reopening, small fitness clubs in Georgia and Oklahoma are seeing 75% or more of their members back. Nationally, 30 to 50% returning members is a good sign. Legoland's reopening Monday drew thin crowds, which may suggest a slow reboot of the $19.3 billion U.S. theme park industry. In Orlando, Universal Studios will reopen to employees and some season pass holders this week, with the general public joining them June 5th. I'm Andrew O'Day, Bloomberg Radio.
President of the Jewish Communal Fund, Zoya Raines, and her husband Robert Friedman, Jewish activists and philanthropists, talk about why they chose the Jewish Communal Fund for their charitable giving.
As very busy working parents, we wanted to focus more on the charity part of it and wanted to focus more on our children and less on the administration.
The Jewish Communal Fund is one of the oldest and largest donor-advised funds, but at the same time, they're totally up to date and have state-of-the-art systems for us to access and manage our contributions online. The assets in our fund at the JCF grow tax-free, so we can generate more charitable dollars to support the charities that we care about most.
Let JCF minimize your taxes and maximize your charitable giving.
We're incredibly passionate about our charity, and the JCF allows us to focus more on the charity and less on the administration and the headaches.
For more information about Jewish Communal Fund, visit our website at jcfny.org and request a new fund.
This is a message from the government about the emergency measures to support the economy during the period of disruption caused by the coronavirus. To help you, your business, and your workers affected, you can apply for cash grants, business rate holidays, statutory sick pay relief packages, as well as the coronavirus job retention and self-employment income support schemes. For information, go to gov.uk/business-support now.
Get your cook on with Asda, with Uncle Ben's rice 250 grams for just £1, and our Butcher's Selection chicken breast fillets only £3.40 for 650 grams. Why not whack it in the wok? At Asda, we're committed to low prices every day on the quality products you need. Asda. Selected stores and lines subject to availability.
Let's be honest, we all spend too much of our day on social media. But at least you can spend your endless scroll time to discover new things on TuneIn. Follow @TuneIn on Facebook, Twitter, and Instagram to always be in the know about the best new stuff streaming in the app. From breaking news stories and live sporting events.
Yeah, but it's unique times. I think there's unique circumstances, and we're trying to...
To standout stations and podcasts. Stay in touch with TuneIn.
You love TuneIn for live breaking news from CNN, MSNBC, Fox, CNBC, and more. But when you can't catch your favorite show as it airs, it might just be a click away as a podcast. Search your favorite news station to explore all the on-demand news shows on TuneIn.
News 24 hours a day at Bloomberg.com, the Bloomberg Business app, and on Quick Take by Bloomberg. This is a Bloomberg Business Flash.
And I'm Karen Moscow. Stocks are slumping in the U.S. and Europe as concern the recent rally had gone too far, too fast, overshadows new stimulus measures and encouraging economic data. The S&P 500 index dropping for the first time in 5 sessions, with real estate companies and utilities among the worst performers. We check the markets every 15 minutes throughout the trading day on Bloomberg. The S&P 500 is down 1/3% or 10 points at 3112. The Dow Jones Industrial average down about 1/3% or 99 points at 26,173, and the NASDAQ little change now at 96.82. 10-year Treasury down 18/30 seconds, yield 0.80%. The yield on the 2-year 0.19%. NYMEX crude oil down 1.9% or 69 cents at 36.62 a barrel. COMEX gold is up 0.6% or $9.50 at 1714.50 an ounce. The euro 1.1265 against the dollar. The yen is at 108.70. As business reopenings picked up nationwide, Americans filed nearly 2 million applications for unemployment benefits last week, reflecting a slowing in job losses. Watching eBay up 7.1%, it raised its forecast for revenue and earnings in the current quarter as people flock to the digital marketplace amid the pandemic. And that's a Bloomberg Business Flash. Tom and Paul.
Karen, thanks so much. Bloomberg Surveillance this morning, folks, always brought to you by Witham, a forward-thinking advisory and accounting firm helping clients to be in a position of strength in the new reality of business. Learn about their innovative solutions by visiting Witham.com. I need to spell that Witham, W-I-T-H-U-M, Witham.com. Paul Sweeney and Tom Keene here. Incredible news flow as well. And we cannot forget, as Karen mentions, the claims number that we are in a pandemic. It has been good to catch up with the Johns Hopkins University's Jason Farley. Here he is.
I think we're getting initial data that suggests that some openings have resulted in spikes in cases, but we also have data that suggests that some places are doing it safely and are having reemergence into kind of normal life again, and are doing it quite effectively. So I think it all depends on how the population responds to the non-pharmaceutical measures, such as social distancing, mask wearing, reducing exposure, and risk mitigation.
So would we have a better picture of that in about 2 weeks from now, or could it also take longer? The more we go on, will people socially distance less?
Well, we know that human behavior, no matter what disease it is, coronavirus or others, their adherence to certain practices wane over time. People get fatigue. People who take chronic medications every day for a long period get fatigue and miss doses. That's part of what we in the healthcare, industry know as common behavior of humans. So we are expecting people to struggle and continuing to struggle. And so that's why you hear the health experts constantly reiterate the same message over and over about the importance of social distancing, the importance of hand washing, the importance of using a mask. But we also know that the economy has to open up, and so people will go about. And as restrictions get reduced in local communities, we are seeing folks gather more. Clearly, we've seen evidence of people beginning to travel in certain jurisdictions, and we just need to be vigilant and following the cases that occur, anywhere from 10 to 14 days after potential exposure.
How are the protests, impacting, or how will they potentially impact the transmission of COVID-19 in the U.S. and frankly also elsewhere in the world, like London? Right.
So we know that any large gathering of people increases the potential for transmission. And so with these protests, they are large gatherings of people. It's challenging in the protests to social distance, clearly. We've seen the images around the world. We've also seen, some protesters wearing masks, others not. We also see our law enforcement community who are sometimes, engaging in having to remove their mask falling off. So I think everyone who participates in the protest needs to be really vigilant about symptoms, about the onset of any kind of new fevers, coughs, shortness of breath, or anything else that could be in the COVID spectrum of illness, and report that and get testing soon so that contact tracing can begin.
Jason, how is contact tracing actually going along? We've had in certain countries around the world a major setback. Is it doing better in the U.S.?
I think we are in different states and different cities struggling with contact tracing. It has taken us a while to really get up the necessary workforce to do it en masse. I think that continues to be a challenge throughout the country. Obviously, the harder hit areas need a larger workforce to do and find patients. But we also see, making their work harder is a ongoing social media, misinformation around for people trying to feel like there are people really kind of spying on them, wanting to know their contacts and really wanting to judge behavior that they may have had in having contact. And so I would just encourage everyone to, if you are contacted based from the health department saying that you are a contact of individuals, to share the people that you've come in contact with, because it's so essential. It's such an essential public health measure to effectively do contact tracing and help people realize that they could be exposed and need to self-isolate.
Jason Farley with the Johns Hopkins University. Robert emails in. Thank you so much, Robert, emailing. He's emailing in, Paul, from goalie camp. He's up at some ice hockey camp up north. I think he's like coaching goalies or something like that. He was looking at Australia dollar yen. He says that's the preferred way to play all the mumbo jumbo Signorella was talking about. That would be strong Australia, weak yen, I believe, is how you structure that. Paul, what have you learned about your wheelhouse in the last number of weeks? What have you actually learned about streaming besides I can't keep track of which HBO I'm supposed to have?
Yeah, it's interesting, Tom. I think there's, this quarantine has really amped up the amount of media that people are consuming, the amount of video that they're consuming. So, it appears like when you listen to some of these companies that they're all seeing some pretty good take-up of their streaming services here. Because, what else do we have to do here? But it's really going to be a shakeout over the next year or two. I think there's so many services out there, and Netflix continues to be the big player, but Disney is there, and AT&T with all their various HBO services is there. Comcast is there with Peacock, and there's just on and on. So there's a lot of choices out there for consumers.
And Paul, what's amazing here, and you clearly see this in the different studies and surveys, is the youth of America. Am I right? They're just walking away from traditional TV. That's not the verbal, but that's the action of what they're doing.
That's the action of what they're doing, and that's been pretty consistent over the last, several years, maybe a decade or so. And they're playing a lot more games, Tom. And they're gaming. I mean, you think about, all the kids left at home. They are gaming like crazy. Yes.
We just made it to Sandman and Bed Wars. I have no idea what I just said. I have it on good authority. We are at Sandman level on Bed Wars. We are produced by someone who plays Minecraft all day, Richard Truman. This is Bloomberg.
TfL has a plan to help London reopen carefully, safely and sustainably. You can do your bit by continuing to work from home if you can and avoiding public transport. If you must use public transport, avoid peak hours, wear a face covering and wash your hands before and after travel. For everyone's safety, we regularly clean our services with antiviral disinfectant and will be providing hand sanitizer across our network. For more information, search TfL's Restart Plan. To the Mayor of London and TfL, every journey matters.
This is a message from the RNLI and Her Majesty's Coast Guard. Beach lifeguards can't be everywhere this summer, so they can't always protect your family, but you can. So keep an eye on your loved ones. Avoid taking risks in the sea. Don't use inflatables. In an emergency, dial 999 for the Coast Guard. Get more advice at rnli.org/beach2020. Thank you.
In case you didn't know, TuneIn lets you listen to the same radio stations you pick up on your home or car radio, except you can hear them from anywhere. If you want to find a station from somewhere else in the world, navigate to the By Location section under Browse. Keep exploring with TuneIn.
With millions of podcasts dropping new episodes all the time, how do you keep up with all your favorites? TuneIn makes it easy. Simply head to the home screen and find your new episode section to see the latest additions.
Where do sports, culture, and basketball nostalgia collide? On their podcast, Knuckleheads, NBA veterans Quentin Richardson and Darius Miles sit down with athletes, musicians, and entertainers to get brutally honest, totally unguarded conversations about everything from current events to untold stories from the golden era of sports.
O'Neal. You know that, right? I tried to tip dunk all the free throw line one time.
Search Knuckleheads on TuneIn to listen.
Buckle up, race fans.
NASCAR is back in the driver's seat.
and you can cut straight to the action here.
With the Performance Racing Network on TuneIn, you can hear PRN's live coverage of some of this year's top events.
As NASCAR's top drivers, Kevin Harvick,
Clint Boyer, and more get back on the track.
Search Performance Racing Network to listen and see upcoming races.
Ready to talk brass tacks on what's happening in Major League Baseball? Turn to the Effectively Wild podcast from Fangraphs for daily statistics, analysis, and commentary.
One team will say, yeah, we're going to keep paying minor leaguers their stipend, and another team will say, we're going to extend the stipend through this month, and then another team will say, nope, we're cutting them off. So are extending it at least through August, which would basically be the end of the minor league regular season.
Search Effectively Wild on TuneIn to listen.
Okay, here we go.
With the NFL draft in the books and the schedule set, check out a TuneIn podcast for daily updates on the lead up to the 2020 season. Like the Ringer NFL show, where a rotating cast of Ringer experts talk with players, coaches, and special guests about the NFL landscape.
A lot of the other teams that we consider...
Or ESPN's NFL Live.
If there are some delays because of the COVID-19...
Search sports on TuneIn to explore these pods and much more.
From the financial capital of the world, 24 hours a day at Bloomberg.com, on the Bloomberg Business app, and on Quick Take by Bloomberg. This is Bloomberg Radio. This is Bloomberg Markets with Lisa Abramowitz and Paul Sweeney.
How do you kind of view the volatility in the marketplace here?
What are you looking at to give you some sort of compass through this period?
Companies across the board, across industries, really trying to shore up their balance sheets.
A lot of economists are just throwing up their hands and saying, we don't know.
Breaking market news and insight from Bloomberg experts.
There's only so much that you can speed up vaccine development. Because of all the dislocations, there's always relative value trades that you could be doing.
This could be a U-shaped recession rather than a V-shaped recession.
It's the uncertainty, I think, that is really spooking everyone.
This is Bloomberg Markets with Lisa Abramowitz and Paul Sweeney on Bloomberg Radio.
Coming up here on this Thursday, the dueling narratives of a bleak jobs market globally, paired with the bazooka, the kitchen sink, and the whole enchilada, all mixed together and thrown at the markets from central banks around the world. We'll be talking about all of that coming up. Right now, though, let's get the numbers. Greg Jarrett has that with the Bloomberg Business Flash. Greg.
Well, we're not putting the cheese on the whole enchilada today. Stocks are slumping a bit in the U.S. and in Europe as concerned the recent rally had gone just too far too fast, overshadowed new stimulus measures and encouraging economic data. The S&P is down, or edging down, I should say, for the first time in 5 sessions. Why don't we take a look at those numbers as we do every 15 minutes throughout the trading day. S&P 500 is down less than 0.1%, down 2. The Dow is down less than 0.1%, down 16. And the NASDAQ is up 0.1%, up 10. The 10-year is down 19.30 seconds. The yield 0.80%. West Texas Intermediate crude oil is down 1.3% right now at $36.80 per barrel. COMEX gold's up 0.2% at $17.0780 an ounce. The dollar yen is at 108.69. The euro is $1.1278. The British pound is $1.2568. It's been a rough few months for Tailored Brands, the owner of dress clothing retailers Men's Warehouse and Joseph A. Bank. Closed office, people working from home, postponed weddings, canceled proms. It's not a great time to be in the business of selling suits. Debt issued by Men's Warehouse has cratered to deeply distressed levels since March, but Tailored Brands stock is up 2.21% today, based solely on the sartorial habits of Bloomberg's Charlie Pellet, who wears a suit and tie even when he's working from his broom closet in Brooklyn. That's a Bloomberg Business Flash. Bloomberg Markets continues now with Lisa and Paul.
What an image. Greg Jarrett, thank you so much. We appreciate that. Charlie Pellet in his closet broadcasting all day for Bloomberg Radio. So as Greg was just mentioning, kind of mixed opening here to the morning. Very tough jobless claims number once again. The market's kind of quiet here on the opening. Let's get a sense of what this all means. We are fortunate to welcome Bloomberg Stocks editor Dave Wilson, as well as Yelena Shuletieva, senior U.S. economist for Bloomberg Economics. Dave, let's start with you here. Again, kind of a quiet opening here to the market. What are you looking at?
Yeah, amazing how that works, isn't it? You have the biggest 50-day gain in the history of the S&P 500 as a 500 stock index, which goes back to 1957. And, yeah, things are kind of stalling out. I mean, it just shows you how far we've come and how fast. And it's a matter of what, kind of leads to a further recovery here, arguably. I mean, given that what we're seeing today is really kind of more of the same. Airline stocks doing well. especially American up 11.5%. They're planning to increase their flight schedule next month quite a bit. And so you get a real sense of recovery there. They're looking at 40% of their 2019 capacity for July as opposed to 30% for June. So that gives you some sense of what's going on. You've got this deal in the securities business, TD Ameritrade, being bought by Charles Schwab. And we've been told, and CNBC has too, that antitrust regulators have approved that deal. You're talking, $23 billion there. So those are some pluses. In terms of the minuses, the one that really jumps out is the Gap. It's down 3% because it's being sued over non-payment of rent. You got to figure a whole lot of other retailers are going to be in a similar position. It's Simon Property Group, the mall owner, that filed the suit. So it'll be interesting to see how that unfolds in terms of the broader retail story. And we're seeing declines among, several chains in early trading. Also, apparel makers. We're talking about the likes of L Brands, Hanes Brands, Ralph Lauren. So, you kind of got a bit of a back and forth going on here, and not a whole lot of direction for the market after a real definite direction going back to the lows of March.
There might not be a direction for equities. There is a direction, though, for bonds, and it is really interesting today. It is priced lower, yields higher, even after the ECB unveiled an unprecedented addition to its unprecedented stimulus that wasn't in itself unprecedented, with the European Union trying to think of an unprecedented fiscal rescue package. All of this money getting sent at the market, and still many questions exist. The jobs market is the reason. Yelena Shilyatyeva joining us now, senior U.S. economist for Bloomberg Economics. Yelena, let's talk about that jobs number. I was so confused by this report. I got to say, how did you read it?
Well, you have to kind of step back and think about all the signals we are getting from the latest labor market data. So ADP surprises to the upside, suggesting maybe some improvement in the labor market is coming. Then you get the non-manufacturing ASM index for employment, and that is not seeing any improvement really. So that is still very deep in the recessionary area. And this morning, claims data basically tells us that the improvement in the labor market is happening, but it is happening at a very gradual pace. So it will take a lot of months for us to see a sort of the normal level in terms of the labor market. It will take time to get the jobs back. So if you look at continuing claims numbers, they are improving from the very high peak we reached a few weeks ago, but they're improving at a very gradual pace.
So, Dave Wilson, just taking a quick look at this market here, it just feels like a reasonable pause to me. I mean, what's the sense of when you think about some of what the strategists are saying out there in terms of valuation here? Are we getting to crazy valuation levels here, given that we've had really bad earnings numbers?
Well, I mean, it all depends on what your perspective is. If you're looking at, the next couple of quarters in terms of profit, sure, you could argue that things are relatively expensive. We've seen a number of strategists point to what they call, forward price earnings ratios, where you're looking at projected profit. And, you're seeing some of the highest levels there in the past 20 years. That's one side. But the other side, my chart of the day from yesterday focusing on what they call the cyclically adjusted price earnings ratio, looking at 10 years of historical profits. And by that standard, we're kind of in line pretty much with where we've been over the past 3 decades. When we saw that CAPE ratio, the one that Robert Shiller at Yale University helped develop, really kind of jump up from where it had been historically. So, it's one of these things where on the one hand, you can say stocks are expensive, but on the other hand, you can certainly find indicators that suggest that they aren't, even after the recovery that we've had here. So that's kind of the back and forth going on, in terms of where we are now.
Yelena, just talking about the recovery quickly, what's the sense we're getting in terms of how quickly people are getting rehired back into the workforce as we reopen?
Well, we will see the number tomorrow, but the payrolls number will still reflect that people are being fired, right? So I think that the next week's JOLTS reading which is for the month of April, will tell us a little bit more about where the vacancies are, if there are any. So we saw a big decline in the vacancy rate, but maybe some industries are already hiring. So that is an important data gauge to watch. Even though it comes with a significant lag, there will be some information there.
Bloomberg Stocks editor Dave Wilson, thank you so much. And Yelena Shulyatova, senior U.S. economist for Bloomberg Economics. Thank you so much for that. Really tough jobs number, Lisa. But, I guess you could say the trend is working in a positive way, but still just a lot of pain, a lot of hurt out there. And it's a question of, how quickly, as you just suggested, how quickly some of these folks can get rehired and get back into the economy.
Well, and there's a fear, too, especially because the Fed has doubled down on every program that it has, and so is the ECB. Are they going to take pressure off the federal government, off the European Union to come up with fiscal stimulus, which was much more needed to get money to Main Street? Will it take the pressure off and lead to a protracted turndown, something a lot of people are debating right now, Paul?
Yeah, exactly right, Lisa. And I think the next thing investors are looking for is that fiscal stimulus coming out of Washington. It's mired in a little bit of politics right now, but hopefully some of that can get to the folks who need it most. Right now, let's head down to Washington, D.C. for world and national headlines with Nathan Hager. Nathan, what do you have for us?
Well, adding to the pain over job loss, Paul, is the ongoing hurt over race relations and police relations in this country, as evidenced in more than a week of protests following the killing of George Floyd in Minneapolis. Today is a day of mourning in that Minnesota city, with the first of a series of memorials being held today at North Central University. This after Minnesota's Attorney General Keith Ellison upgraded charges to second-degree murder against Derek Chauvin, the officer who held his knee to Floyd's neck, and aiding and abetting charges against the three other officers at the scene. Minnesota Governor Tim Walz.
This is a step today that the public wants to see. Our justice system needs to make sure that justice is served.
Now, last night's protests were relatively peaceful, though there were some tensions in New York and in New Orleans after Saints quarterback Drew Brees told Yahoo Finance he disagrees with players kneeling during the national anthem. Brees' teammate Malcolm Jenkins says he's disappointed.
Because while the world tells you that you're not worthy, that your life doesn't matter, the last place you want to hear from are the guys that you go to war with and that you consider to be allies and to be your friends.
Now, this morning, Brees issued an apology in an Instagram post. He said his comments were insensitive and completely missed the mark on the issues we're facing right now in this country. Later, the quarterback told ESPN he stands with his teammates fighting for racial equality, but also with the military, past and present. Global news 24 hours a day on air and on Quick Take by Bloomberg, powered by more than 2,700 journalists and analysts in more than 120 countries. This is Bloomberg.
Why can't you just go to some remote island and wait till all this is over?
The range of outcomes is so wide.
Because it's your job.
What do you think some of the structural changes might result?
Fortunately, it's our job too.
How's the value done in this market?
Paul Sweeney and Lisa Abramowitz.
It's very hard to make a forecast.
Bloomberg Markets.
This could be a lower for longer type of hit.
Weekday mornings at 10 Eastern on Bloomberg Radio, the Bloomberg Business app, and BloombergRadio.com. Bloomberg, the world is listening.
Hi, I'm Danica Patrick. Watching my nieces grow, play, and learn is amazing, but not every child gets to be carefree. 1 in 6 kids in the U.S. are hungry. This breaks my heart, and it's something that Feeding America is working to change. Each year, the Feeding America network of food banks rescues billions of pounds of good food that would have gone to waste and gives it to families in need. To help, visit feedingamerica.org.
Brought to you by Feeding America and the Ad Council.
In-depth analysis, concise reporting, need-to-know global business news. Around the world and across the markets, Bloomberg connects the dots for decision makers. Stay on top of today's headlines. Follow big breakthroughs in tech. Understand the latest political issues. See how the world's wealthiest are spending their money. Track what's happening in the markets, and much more. Subscribe today to Bloomberg, the global standard for business reporting. Get it all at Bloomberg.com/subscriptions.
When you went car shopping, you meant business.
You ace vehicle history searches and test drives. You out-salesman to the salesman. Now you've got your wheels. If you manage that, you can get your retirement plan on track. Visiting aceyourretirement.org can help. With 401k tips and smart saving strategies, you'll have the info you need to get more for your future. Go to aceyourretirement.org, because when it comes to speeding past financial challenges, you're an ace. Brought to you by AARP and the Ad Council.
Market upheavals.
The narrative is
for the friendships, for the fresh air, for the space to grow, for the knowledge, for the sport, for the outdoor education, for the wide horizons, for the academic excellence, for the future. Unleash your child's education at West Buckland School, a co-educational day and boarding school in beautiful North Devon. If you're moving to the southwest for a better quality of life, this is education without compromise in what the Good Schools Guide called a gem of a school in an exceptional location. To see for yourself, find us at westbuckland.com.
You know that feeling when you get more than you expected? Like discovering that the box of chocolates has a whole other layer underneath, or scoring extra poppadoms with your takeaway, or joining Tesco Mobile and finding out you get the latest phones and 99% UK network coverage. Yeah, that moment feels good, right? Tesco Mobile. Every little helps.
99% 4G population coverage indoors and outdoors across UK.
People's Postcode Lottery's 30k a day is back. £30,000 will be won every single day by players in the July draws. That's £30,000 for every player in the winning postcode. Visit postcodelottery.co.uk/radio before midnight on the 18th of June to play in the July draws. PPL managed lotteries on behalf of good causes. 16 plus conditions apply. Play responsibly.
The IBM Flash storage solution can be broken down into 3 S's. Speed, retrieve data fast. Scalability, grow your storage as your business grows. Simplicity, easily migrate and integrate with existing systems. Oh, and there's a 4th. It's surprisingly affordable, with a recommended monthly price of £200 for 26 terabytes. Order by the 30th of June and pay nothing for 90 days. Visit ibm.biz/flash offer now.
This is a message from the government about the next stage of controlling coronavirus with NHS Test and Trace. To protect your friends and family, testing and tracing must become a new way of life. If you have symptoms, you need to get a test immediately. Don't leave home for any other reason. If you test positive, we will contact you to trace people who you might have infected. From now on, if you're told you've been exposed to an infected person, you must self-isolate for 14 days. Play your part and do the right thing so we can safely return to a more normal life. Go to nhs.uk or call 119. Stay alert. Control the virus. Save lives. Want to relive the glory of college football?
Balls over a man, into the end zone.
Come explore TuneIn's classic game replay collection to hear ESPN's complete coverage of the 2019 New Year's 6 bowl games. Don't miss your chance to re-experience the Rose Bowl, the 2020 National Championship, featuring Clemson and LSU.
There are going to be 2 champions on the field tomorrow night. There's going to be 1 team hold up the trophy.
Pass to the 5! Touchdown! Search classic game replays to listen for free. Buckle up, race fans.
NASCAR is back in the driver's seat.
And you can cut straight to the action here.
With the Performance Racing Network on TuneIn, you can hear PRN's live coverage of some of this year's top events.
As NASCAR's top drivers, Kevin Harvick,
Clint Boyer, and more get back on the track.
Search Performance Racing Network to listen and see upcoming races.
How do you keep track of all your favorite stations and podcasts? Easy. You add them to your favorites list. Just find the audio you want to bookmark and tap the heart icon. Then, whenever you want to browse your favorites, you'll find everything under the Favorites tab.
News 24 hours a day at Bloomberg.com, the Bloomberg Business app, and on Quick Take by Bloomberg. This is a Bloomberg Business Flash.
Stocks edged down here in the U.S. and in Europe as well. There's concern the recent rally went too far too fast. New stimulus measures and encouraging economic data did not stimulate the markets. We check the numbers every 15 minutes throughout the trading day here on Bloomberg Radio. S&P 500 is a little changed now. The Dow Jones Industrial Average is also a little changed, up 10. And the NASDAQ is up 0.2%, up 17. Just in the past couple of minutes, the markets are starting to go into the green. The 10-year is down 18.30 seconds. The yield is 0.8%. West Texas Intermediate crude is down 1.25% at 36.83 a barrel, while COMEX gold's up 0.4% at 17.11 even per ounce. The dollar yen 108.79. The euro's $1.1285. The British pound $1.2567. You may have missed out on your empty airline trip. American Airlines sent industry shares climbing after the carrier said it would boost July flights 74%, signaling U.S. travelers freed from shelter-in-place orders are deciding to buy a ticket to go somewhere, anywhere. Right now, American is up 14.3%. That's a Bloomberg Business Flash. I'm Greg Jarrett.
You're listening to Bloomberg Markets with Lisa Abramowitz and Paul Sweeney on Bloomberg Radio.
Well, it's another difficult jobless claims number today. We're looking at about 40 million people since the beginning of the pandemic have filed jobless claims. The real question is, how are the gig economy employees being counted here, and how are they faring during this economy? For that, we're pleased to have John Chuang, CEO and co-founder of Aquanet, discusses the gig economy. So, John, thanks so much for joining us here. Give us a sense of how gig economy employees are faring here in this economic environment.
Yeah, gig economy employees are not doing well. They are a very large part of the record numbers of unemployed people that we're having, and more importantly, because they are not really part of the social safety net. They have a lot more difficulty getting unemployment, and by and large, they do not have sick pay, and they do not have health insurance from their employer. So they are definitely hurting more than the average employee.
Well, so I'm wondering going forward whether we're going to see a sea change in some of the lack of protections that gig workers have based on the fact that the government has had to step in a big way to back up these workers and may push employers to do more.
I certainly hope so. Right now, there's a great deal of inequality in corporate America. Even in some of the biggest, most richest American companies, you have really two classes of employees. One regular W-2 employees who might get great benefits and retirement plans and lots of perks. But then you have the contingent contractors who are combined, of gig economy employees as well as temporary contractors, and they do not get benefits, and that really needs to change. And it's changing by companies on their own taking some initiatives. There have been some companies taking steps, a few ones recently, but it might take government involvement to really change it. You have initiatives like AB5 in California, where the California government has basically passed laws making it a lot more difficult to hire people as 1099s or contractors, which will kind of force at least basic employment protections on a lot of businesses, and I think we should all support that because it's only fair for the workers.
So, John, I guess, we saw over the last several years, as I think about Uber and Lyft and other gig economy companies, a real sense that, this is a real cool way to think about work. It's flexible. I can work when I want, where I want, kind of set my own hours, be my own boss. There's a big move towards the gig economy. And I always joke that anytime you walk into a Starbucks anywhere around the country, it seems like the entire Starbucks is people with, computers open doing certain gig economy jobs. You think that's going to change at all on the other side of this pandemic?
Look, there's a really big opportunity here to make the gig economy great. That sort of flexibility that you're talking about and the easy access to jobs is wonderful. And we should really be proud of an economy that has created this and the entrepreneurship that has built such flexibility in work. Now, there is a downside, though, because as they built these systems, they did very quickly, and they wanted to have as much cost advantage as possible. So they decided to pay people as contractors, which means you don't pay employment taxes, and you don't do minimum wage, and you don't overtime law doesn't affect you, and you cut out all the social services. Well, this has a really big impact, and it's been magnified by the pandemic. So my hope is what these companies will do, maybe with some prodding from the government, is keep the gig economy and keep all the great benefits, but add the social protections such as minimum wage, unemployment insurance, overtime laws that all companies have really provided their workers for the last 100 years. If companies like McDonald's and Starbucks and Walmart could provide these protections for their employees, I'm sure gig economy companies can do the same.
John, I'm sure you've heard this argument. And just to give some perspective, you co-founded this company in 1986 while you were an undergraduate at Harvard. It's fascinating to see how much the world has transformed in that time with the focus on the gig economy. What do you say to people who counter your argument about protections and say that this market would not be nearly as dynamic if companies had to pay the kind of overhead required of companies that do have full-time non-gig workers?
No, I disagree with that fully. Basically, America wants companies that could provide value to consumers and pay their workers a fair wage. They do not want to participate in businesses that mistreat their workers. And that's why many American companies that are the most successful have managed to do both. What gig economy companies are saying is that, hey, we can't provide great value to customers unless we underpay our workers. And if that is the case, which is not the case, but if that was the case, then there should be no gig economy because you cannot essentially provide great services while mistreating your workers. Americans don't want that.
John Chuang, thank you so much for being with us, co-founder, chairman, and chief executive officer of Aquint here in New York, talking about that gig economy, which has very much been in focus. And Paul, when we parse the jobs data tomorrow, one big question mark is the number of people receiving the pandemic unemployment insurance, a separate bucket that covers the gig workers. Coming up, we'll be talking more about the economy as well as the Fed support of municipalities. This is Bloomberg Markets.
This is a Bloomberg Money Minute. Stocks are little changed in trading with the focus on jobs. Americans filed nearly 2 million applications for unemployment benefits last week, reflecting a slowing in job losses. Initial jobless claims totaled 1.88 million last week. Tomorrow is the May jobs report. American Airlines will boost July flights 74% from its current schedule as consumers rush back to flying more quickly than expected. The busiest days next month will have about 4,000 flights, up from 2,300 in June. The North American oil patch will still see a coming wave of bankruptcies, even after a recent rebound in crude prices, according to law firm Haynes & Boone. They said that prices aren't high enough for many heavily leveraged shale producers. And FedEx is following UPS with plans to raise delivery prices for residential and large packages. For couriers, the surge of residential demand during the lockdowns has exceeded the traditional peak season holiday rush. Courtney Donahoe, Bloomberg Radio.
There are everyday actions to help prevent the spread of respiratory diseases. Wash your hands. Avoid close contact with people who are sick. Avoid touching your eyes, nose, and mouth. Stay home when you are sick. Cover your cough or sneeze. Clean and disinfect frequently touched objects with household cleaning spray. For more information, visit cdc.gov/COVID-19. This message brought to you by the National Association of Broadcasters and this station.
It's a stock market driver.
Now they're starting to see a little bit of panic from policymakers.
It's a global political force.
How will this epidemic reshape big tech and its relationship with Washington?
It's a virus.
This coronavirus is a global pandemic.
Is there a safe haven?
And the facts matter.
The situation is so bad because of the virus that is simply unavoidable.
Bloomberg Radio, the Bloomberg Business app, and BloombergRadio.com. Bloomberg, the world is listening.
Are you interested in a challenge?
Hi, I'm Dan from NatWest Manchester branch. We know life's hard right now, but if coronavirus has affected your finances, we're doing our best to make things easier. If you're a personal customer, you can request a 3-month payment break if you're struggling with your mortgage, loan or credit card. Or if you need help with an existing arranged overdraft, you could get £500 interest-free for 3 months. Remember, every one of us is here to support you. There are lots of ways we could help. Search NatWest Coronavirus.
Eligibility and conditions apply to payment breaks. Overdraft up to your agreed limit if lower than £500.
This is a message from the government about the next stage of controlling coronavirus with NHS Test and Trace. To protect your friends and family, testing and tracing must become a new way of life. If you have symptoms, you need to get a test immediately. Don't leave home for any other reason. If you test positive, we will contact you to trace people who you might have infected. From now on, if you're told you've been exposed to an infected person, you must self-isolate for 14 days. Play your part and do the right thing so we can safely return to a more normal life. Go to nhs.uk or call 119. Stay alert. Control the virus. Save lives.
Let's be honest, we all spend too much of our day on social media. But at least you can spend your endless scroll time to discover new things on TuneIn. Follow @TuneIn on Facebook, Twitter, and Instagram to always be in the know about the best new stuff streaming in the app. From breaking news stories and live sporting events.
Yeah, but it's unique times. I think there's unique circumstances, and we're trying
to standout stations and podcasts. Stay in touch with TuneIn.
Buckle up, race fans.
NASCAR is back in the driver's seat.
And you can cut straight to the action here.
With the Performance Racing Network on TuneIn, you can hear PRN's live coverage of some of this year's top events.
As NASCAR's top drivers, Kevin Harvick,
Clint Boyer, and more get back on the track.
Search Performance Racing Network to listen and see upcoming races.
With the NHL season temporarily on ice, now is a good time to catch up on past games.
Bergeron, he scores!
With game replay on TuneIn, you can listen to every power play, slap shot, and goal of the 2019-2020 season so far.
Suter to Cunningham to Fiala, he scores!
And for a limited time, it's free for hockey fans everywhere. Search classic game replays to start listening.
With millions of podcasts dropping new episodes all the time, how do you keep up with all your favorites? TuneIn makes it easy. Simply head to the home screen and find your new episode section to see the latest additions.
Looking for your daily fix of NFL news and analysis?
In that. So we had to blow it up at the Super Bowl predictions instead.
Look no further than the Pick 6 podcast, where CBS sports writer Will Brinson gets you up to speed with what's trending in the NFL that day, so that you're always in the know.
Yeah, it's pretty revealing of Brinson's methodology for predictions. When he gets mad at people for predicting good teams are going to win the Super Bowl or good players are going to win major awards, that's how you wind up.
Search Pick 6 on TuneIn to listen.
You love TuneIn for live breaking news from CNN, MSNBC, Fox, CNBC, and more. But when you can't catch your favorite show as it airs, it might just be a click away as a podcast. Search your favorite news station to explore all the on-demand news shows on TuneIn.
Broadcasting live from the Bloomberg Interactive Brokers Studio in New York. Bloomberg 1130 to Washington, D.C. Bloomberg 99.1 to Boston. Bloomberg 106.1 to San Francisco. Bloomberg 960 to the country. Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Markets.
Coming up, we're going to chat with Brian Chapata of Bloomberg Opinion on his column about how the Federal Reserve's municipal bond backstop is still too punishing for municipalities. Plus, Damian Sassower, Bloomberg Intelligence on all things emerging markets on the implications of debt relief stalling for poor nations. But first, let's go to Greg Jarrett of Bloomberg News for a Bloomberg Business Flash. Greg?
Mixed, Paul. That's how stocks are trading right now. The S&P is fluctuating after 5 straight gains. The tech-heavy NASDAQ is edging higher and set a new intraday record after eBay raised its forecast for sales and earnings. Treasury yields are up as weekly jobless claims fell. We'll have more on that in a minute. But right now, we check the markets. The S&P is up 0.1%, up 3. The Dow's up 0.25%, up 65. And the NASDAQ's up 0.25%, up 25. The 10-year is down 19 30 seconds with a yield of 0.8%. West Texas Intermediate crude's down 1.2% at $36.84 a barrel, while COMEX gold's up 0.4% at $17.12 per ounce. The dollar yen is at 108.84, the euro $1.13.12, and the British pound $1.25.95. As business reopenings picked up nationwide, Americans filed nearly 2 million applications for unemployment benefits last week, reflecting a slowing, though far from a halt, in job losses. Initial jobless claims for regular state programs totaled 1.88 million in the week ended May 30th, and that's down from 2.13 million last week. That's a Bloomberg Business Flash. I'm Greg Jarrett.
Bloomberg Opinion, informed perspectives, and expert data-driven commentary on breaking news.
The Federal Reserve yesterday expanded yet another of its programs, this one targeting state and local governments and their ability to be backstopped by the U.S. Central Bank. Right now joining us is someone who has a long specialty in municipal debt and all things fixed income, Brian Chapata, debt markets columnist for Bloomberg Opinion. And Brian, you wrote a column about this latest expansion of the muni bond buying program, saying, yes, it's more, it's still not enough. Please explain.
Yeah, well, so what the Fed did was it expanded the eligibility. So it basically said that all 50 states could have at least 2 cities or counties that can directly issue notes up to 3 years if they want to this Fed facility. They can also designate revenue bond issuers. So in New York, think the MTA or the Port Authority. So that's all well and good, but the issue is that they haven't changed the pricing at all in how they the interest rates that they charge. And so that's going to be a real issue going forward, because you saw Illinois step forward and say, we're going to actually tap this facility for $1.2 billion, and they're charged 3.82% for 1-year notes. And when similar treasuries are at fractional basis points effectively, that's a really high cost, even for a state that's struggling as much as Illinois is.
So, Brian, I mean, is the best way to think about it is what's the Fed rate versus what is really in the market today? So is Illinois, for example, paying significantly more with the Fed facility than they would in the open market?
So actually, no. Illinois has been punished quite a bit by the municipal bond market. It's the lowest rated U.S. state. It's on the brink of a junk rating, which is fairly unprecedented as far as states go historically. So it actually is saving a bit of money relative to a month ago by tapping this Fed facility. But there's a real question about what other municipalities or agencies are going to be able to, are in the similar position as Illinois, because Illinois is a really high profile kind of basket case, frankly, in a lot of ways. And so obviously it went forward with the Fed's facility, but you look at the way that they're pricing this, and it's really hard to see it getting widespread attention.
Brian, I want to zoom out for a minute. There's a fear out there that the more the Federal Reserve does, the more pressure it takes off the federal government to take action on the fiscal side, to actually give aid to states, local governments, individuals. I'm wondering how far this Fed program in its expanded form goes with respect to helping states and local governments borrow the money they need at cheap rates, going out, plugging those deficits, and basically eliminate some of the urgency for the federal government.
Yeah, I mean, I think that's a really interesting question. And the thing that I always come back to is I think about this municipal facility, and I also think about the Fed's corporate credit facilities, right? And so you see what they're doing on the corporate bond side. I mean, even though the corporate bond market is in a bonanza right now, $1 trillion plus of investment grade issuance, I mean, they're going out and they're still buying hundreds of millions of dollars worth per week of ETFs. And they're really supporting this market. They're really lowering the cost of credit. And while I understand that the Fed may say, okay, state and local issuance is more of a federal government fiscal policy matter, it does sort of ring hollow when you see what they're doing on the corporate side, because the municipalities are ultimately on the front line of not just the coronavirus, but also many of the protests that have been going on across the country. So, I mean, they need some help, and just plugging these gaps with 1, 2, 3 year notes would be really beneficial, but the rates are, in most cases, too punitive.
So what's the alternative for some of these municipalities, Brian, if again, they look at these rates from the Fed and they're just not that attractive? That's really the lender of last resort, is it not?
Yeah, so, I mean, I think ultimately what the Fed's pricing it should do is it should try to effectively compress spreads in the primary markets. I mean, obviously, the ultimate goal is you don't want to have issuers widely tap this facility. You want the public markets to stand on their own. But as it stands, if there's no adoption whatsoever aside from Illinois, and like I said before, the MTA and the Port Authority have applied for access to this facility, it's really unclear exactly how it'll ultimately encourage more debt sales. You see the corporate bond market is on fire, running at about twice the pace of last year. The muni market is effectively running at roughly the same pace, a slightly elevated pace, but not much. So that signals that there's not a ton of private underwriting going on right now when it's potentially needed.
Brian, just to rip up the script here, if I was going to channel Tom Keene, which I'm not, but let's say I was, why are bonds selling off so much today?
I think there's concern, I think, about stagflation in some sense. I just think the long end got, obviously really, really expensive, and everyone's seeing this rush of corporate bond sales in addition to the 20-year bond auction now, in addition to the 30-year. And frankly, it's just a risk-on environment, and it seems like stocks can do no wrong right now. And, people are saying, I don't want interest rate risk at the long end. I'd rather take that risk somewhere else, perhaps credit risk, because the Fed is backstopping it.
Brian, thanks so much for joining us. We always appreciate your thoughts on all things credit and fixed income. Brian Chapata, debt markets columnist for Bloomberg Opinion. You can read Brian's work at Bloomberg.com/opinion and all the Bloomberg Opinion work there as well. And on the terminal, it's OPIN Go. Lots of great work there. So I recommend that you take a look there. And again, the markets, equity markets, after starting a little bit soft, a little bit under the water, turning a little bit positive here, despite just some extraordinary jobless claims. Once again, the bad news is that the number's big. The good news is that trends seem to be getting a little less bad. Right now, let's head down to Washington, D.C. for world and national headlines with Nathan Hager. Nathan, what do you have for us?
Well, Paul, after more than a week of protests over the police killing of George Floyd, Minnesota is holding a day of mourning. The first in a series of memorials to Floyd's life is being held today in Minneapolis. The Reverend Al Sharpton will deliver the eulogy at North Central University.
I think that it will celebrate his life. It will also raise the level of pain for this family.
Other ceremonies will be held Saturday in North Carolina near Floyd's birthplace, and then on Monday in Houston before a private burial Tuesday. All 4 officers involved are now facing charges, including second-degree murder for the cop who knelt on Floyd's neck and aiding and abetting for the other 3. Minnesota Attorney General Keith Ellison was asked on ABC's Good Morning America what he has to prove.
That they helped. And if you can look at the tape and see who's sitting where and see the assistance that was given, meaningful and important assistance to what Chauvin was doing.
An autopsy shows Floyd was infected with COVID-19 when he died. Ellison acknowledges the officer's defense lawyers could use that to bolster their case. In Georgia,